and welcome to CoinDesk Live, coming to you from Korea Blockchain Week in Seoul. This is day 2 of our live programming, bringing you the best of the best from right here on the conference floor. I'm Jen Sanasi.
And I am Sam Yu and Jen. Day 2, we are ready to go. We had a great day 1.
We had an amazing day 1.
Super excited to see what day 2 has. What's the highlights of yesterday for you?
I think, so 2 things. I think experiencing Korea, experiencing the culture here, learning more about their perspective on the global financial system and how that relates back to how they operate here. Of course, having Arthur Hayes at the desk. He was explaining a little bit about that. You know, there is a very large amount of retail investors in Korea that is against the backdrop of a not so good financial situation for them, but it really highlights for me the fact that crypto in this industry that we work in provides an alternative for people, right? An alternative for folks to explore, an alternative for folks to explore financially in and make the decision that's right for them.
Yeah, you know, I think there's something we should not discount, which is last week we were in Rio. Mm-hmm. Now we're in Seoul. Both are countries. Well, Seoul's a city. Both are cities where the countries themselves have a very high population who are really into technology, want to try new things that will make their lives better.
Exactly.
And so whether you're in Rio, which is a very, very different market than here in Seoul, you find the same sort of energy, ethos, desire to change one's life, to learn about how to better one's life, to use the tools of technology to create opportunity for yourself in different ways. That could be like stablecoin cross-border payments in Rio. Here it might be more investor focused, more gaming focused. We've seen some really interesting characters on the show floor. There's still a lot more of a culture vibe here than we had in Rio, which was very financially focused. So I'm just excited to deepen our understanding of this market and the amazing folks that we've had on stage with us. Arthur was great. Charles Hoskinson was great. We got to speak to our first Shiba Inu on
That's not the first Shiba I've spoken to.
On the desk for me, it was a first. But no, it was a really exciting day, and I'm really just looking forward to more.
Yeah, attending these events really kind of highlights crypto meeting people where they are. We don't always get to talk about that when we're all in our homes working on whatever we're working on. And it's just so, I think, incredible to see how far the industry has come in a very small amount of years. There was a long time where people were asking, like, are people just building to build things? Like, what is the real world use case? And we're starting to see the use cases emerge for the people that live in different markets, and that's really exciting. I'm excited to talk about gaming today. As I mentioned yesterday, a lot of big gaming use cases came out of Korea. I know at Avalanche Summit, we spoke to the folks at MapleStory, one of the biggest gaming publishers out of Korea, have onboarded tens of millions of gamers into Web3, and I think those gamers don't even realize they've been onboarded into Web3. And those are the types of use cases that I'm excited about talking about. I know you're excited about talking about those. When I think about the parallels between that gaming scenario I just described and the stablecoin conversation we had in Rio, there are so many parallels. You know, I think we've made it when people have no idea that there's crypto infrastructure behind what they're doing.
I agree. I also think getting the folks that can talk about this not just being engineer types, finance types. You know, we had TJ Miller here yesterday, who's often on the circuit, but who is someone, yes, is an actor, but also seems pretty committed. He told us about the fact that his wife is a Bitcoin maxi compared to him. He's a little bit more on the fence. Today we have Tristan Thompson, NBA player, coming on, who's pretty committed as well to what happens here. You know, last night we were at an event where it was everything from sort of famous actors to K-pop singers, everyone just hanging out, wanting to be around the crypto crowd. And I think there's just a buzz and an energy that you only get at these events IRL. Like, the online community can be fun and sometimes a little deflating also with the amount of trolling that goes around. But here, everything is like positive vibes, and it's really wonderful.
Tristan Thompson from my hometown of Brampton, Ontario. So just got to put that out there.
Of course.
After Tristan,
only the best basketball players.
Only the best from Brampton, Ontario. I won't go down a rabbit hole. But after Tristan, we also have Luca Netz at the desk, talking really about digital collectibles to physical and making it in that world, because so many crypto projects haven't, if we're being honest. And we had a conversation with OSF yesterday, a friend of yours, about the same thing. So some might say that NFTs and collectibles are dead, but there's definitely a community around them. And I think it's important to highlight these stories along with the ones that have been stealing the headlines, like the regulatory conversation and institutional.
Speaking of stealing headlines, I hear there's a lot of interesting information about our next guest.
Do you hear that?
I do hear that. I heard
All
that
right.
from you.
Our next guest is an institutional investor and the founder of platforms like G Capital, dedicated to building scalable digital economies. He joins us today as the founder of Orbit, the title sponsor of Korea Blockchain Week. Please welcome Nabil Jorania.
Guys, really a pleasure to be here, and
Nabil.
great to see you guys again.
Great to have you here. Title sponsor of Korea Blockchain Week. Let's just talk about why Korea. Talk to us about how you're looking at this market and how you're looking to grow in this market.
Yeah, so I've been coming to Korea for a few years, specifically for the Fact Block guys and Korea Blockchain Week, and it was more from the perspective of a spectator. Just trying to understand, like you guys were saying, what's the vibe? What's the vibe check at Korea Blockchain Week is usually a good indication of what's going on in the market, the buzz. And as I got to know Korea a little bit more, you realize that Korea is one of the most important retail markets for crypto in the world, regardless of financial conditions or regardless of regulatory conditions. Korea is usually the first place to bounce back, and retail plays a big part in that. So, given what we're doing with Orbit, I really wanted to make Korea our first stop and engage the Korean community, the Korea blockchain community, and really kind of kick off what we're doing at Orbit here.
Tell us a little bit what Orbit does, especially around the idea of crypto, real-world assets. I know there's a yield component.
Yeah.
What are you really trying to solve for?
So maybe I'll give you a little bit of a background.
Yeah.
I've been in crypto for a long time, but before that I was a traditional, tech entrepreneur. And so I got into crypto almost by accident about a decade ago, just investing in Bitcoin. And then I went through, Ethereum in 2015, and then it was ICOs, and then it was, NFTs. And I really participated in all of those, but each of those taught me something. And at the end of the last, NFT cycle, I realized that crypto doesn't have to be cyclical if you actually try and solve real problems, right? So putting that hat back on, we were looking for opportunities where we could realize the true promise of blockchain, which we found in basically taking traditional businesses and allowing them to use the blockchain rails to transact quicker, less cost, more transparent. So what we decided to do is launch Orbit as a modular stablecoin protocol that allows users to earn a yield from pre-funded intent-based settlements. And what that really means is, if you know the TradFi world, usually the way global businesses work, things have to go through, clearinghouses. They have to go through prime brokerages. There's foreign exchange risks, all the things we know are inefficient about the TradFi world. So what we are doing is we're basically bringing all of that global business on chain, and we're allowing not just the banks to participate in what's being earned, but actually all of the crypto community can now participate in a steady, real world-based yield-bearing platform where the yield is not being generated by some complicated DeFi strategy or some sort of like a missionary yield, that doesn't have any real revenue backing it. But the yield is backed by real companies using the blockchain to settle their global settlement requirements.
You said you got into crypto 10 years ago. What was it that got you in so early?
More than 10 years ago, I would say I bought, funny you mentioned Brampton, Ontario.
I'm telling you, Brampton,
It's
Ontario
everywhere.
is, yes.
So I went to school at Waterloo in Canada. And one of my friends, like around 2011 or 12, said, "Hey, there's this Bitcoin thing. Do you want to figure out what it is?" And I was like, "Okay." But what he meant was he had set up a meeting for me at a parking lot in downtown Toronto.
Yeah.
And I met some guy, and I gave him $200, and he gave me a USB stick that apparently had Bitcoin on it. But I didn't know how to use it. I didn't know how to access it. And that was my first kind of entry into it. And then obviously as things got more and more, well known, I believed in the ethos of Bitcoin. So I started buying Bitcoin and then Ethereum. And that started my journey into investing in a lot of the funds that we all know. And through that, I got access to all the projects, the newer layer ones that were being built. And that's how I kind of started understanding that there is actually a real use case which we can actually come back and build and have the experience to do so.
I'm hoping that this USB stick is not in a landfill somewhere.
I think I reformatted it and probably downloaded some MP3s or something on it.
Oh
So,
my gosh,
yeah.
that story is all too familiar.
Yeah.
Yeah. Yeah.
What do you, so just when we talk, I mean, you talk about a steady yield.
Yes.
And I think that people don't recognize a lot of the world is transacting in sort of payments as needed, take it out, spend it, and also in markets that have deflationary currency opportunities. So the idea that I can say, hey, I want to keep it in something stable and make money on it is, I think, the holy grail for a lot of us here. So tell us, like the practicality, how does that actually work?
So it's a very good question, and I think that's the crux of what we're trying to solve. So I'll give you an example of the telco industry because that was my background, and we say in telco there's a saying, there's two things that run the world outside of the U.S. It's banking and telco. Those are the two most important things because through telco is how everything terminates on someone's phone, on someone's computer, and how people actually transact in the rest of the world, right? But what people don't realize is there's a whole complex, archaic, 30-year-old financial infrastructure that allows you to roam from Brampton to Dubai or from Brampton to Korea. And all these layers have been built underneath it of intermediaries to help that roaming occur, just as a very simple example. Those companies are global companies. They have to operate because they're providing a service for people that is necessary, and they have real clients who are paying them fees. But to operate globally for the last 30 years, they've had to rely on, private credit. They've had to rely on invoice factoring. They've had to rely on all the TradFi, guardrails, I would say, like on, FX, like you said. To send a payment from Kenya to Korea would take 7 days, and your Forex fees and your transfer fees, you're probably paying an extra 8%. So what we started doing is allowing these telcos all around the world come on chain and process, taking away the Forex risk and allowing instant settlement. And to do that, we created our own private liquidity to allow them to create this settlement protocol. So over the last, I would say 20 months, just in our private underlying protocol, we've processed over $10.5 billion in transactions. And we have a pipeline of $20 billion just from this existing, pipeline of just telcos that want to use this type of service because it makes their operation easier because it's instant. You reduce all the risks. And to them, to your point earlier, they don't think it's crypto. To them, they're going to another avenue or a bank that allows them to operate in a way that is much more efficient. And I think that's what people don't realize, that all these businesses exist. They're legit businesses that you use every day. But for them to come on the blockchain, it took the last 15 years for everybody to get to this point where they're like, we can actually do this for you cheaper instead of, building cultural things that, the community used to come on board. And I think that was necessary for us to get to this point. But that's what it is.
I'm so happy we're moving away from that over-explaining of the guts and the infrastructure of crypto and into the, this is why it's going to solve a problem for you. It really is a sign of a mature industry. You spoke about why the Korean market is important to you at Orbit. Sam and I were just talking about how we just came from Rio to Korea. Listening to more about Orbit, it feels like it would solve a lot of problems for folks in many different regions. What are the most important markets for you right now?
I think, like you mentioned, look, the global emerging market is what's most important for me. And it comes from a very innate, I grew up in Kenya, and I believe that in all these countries, like you said, this is the path for people to actually improve their lot in life. But what's happened in crypto over the last, 5-7 years is those are the folks that usually get dumped on when all these cycles end, right? So when we designed Orbit, one of the things I really wanted to make sure of that when we are going to retail, we're not promising things that cannot be delivered, right? So that's why we designed Orbit in a way that we are giving you yield, not from a promise, but from a pre-funded settlement, right? So we're not waiting for the money. The money is already there, and you can elect to gain your yield whenever you want. And I think for a majority of the world and a majority of the retail crypto market, that message is going to resonate. Even though you may not get the 100% yields, if you can realize that you can make steady yield month over month from real businesses, I think that's what's going to change the narrative for the rest of the world, even the U.S.
And Nabil, you mentioned you grew up in Kenya. We were recently talking to someone who has a stablecoin wallet company in Ghana, and tell me if I'm incorrect about this, but it feels like markets like Africa are ones that already sort of leapfrogged needing the wires in the ground around the phone systems. And so mobile became really the way people did their life. Yeah. And telco better than most. It feels like the way we can get the African continent to sort of really leapfrog into the future with us is through the opportunity of micropayments, crypto payments like yield, lending, all of this, but really phone-based, and that there's such an opportunity there. Is that the right way to read it?
100%. Look, M-Pesa, was around 10, over a decade ago, right? And that, that came out of Kenya, so I'm proud of that. But I think, I hear like you said, I don't like the crypto jargon a lot, so I try and simplify things. But, you always hear people say, we want to onboard the next billion people in crypto. Well, that's not in the US, right? That's not in Europe. And to onboard the next billion people, you need to give them a reason to not just gamble, but to participate, right? And that's why I think makes sense for a vast variety of the retail world.
All right, Nabil, we got to wrap it. Thank you so much for opening the show with us. It was a pleasure chatting to you. And shout out to Waterloo and Brampton.
Thank you. It was a pleasure being here. Thank you, guys.
Nabil.
That was Orbit founder Nabil Jorania. We are going to take a quick break. We'll be right back. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Hello and welcome back to CoinDesk Live from Korea Blockchain Week. All right, we are talking about AI right now. The acceleration of AI has created an unprecedented demand for data and computation, a demand that traditional blockchains struggle to meet. Our next guest is building what he calls the foundational layer for the new world of on-chain AI. Co-founder and CEO of Zero G Labs joins us now, Michael Heinrich. Hello.
Nice to be here. Thanks for having me.
Of course. Thanks for being here. We're sitting here in Korea. So let's start there. What does it mean for you to be here talking about Zero G Labs in Korea?
It's been super fun. We've actually invested very heavily into Korea. We signed one of the biggest deals with KBW, for example. It's a 3-year deal. And I've probably been here every month, so Korea feels like a second home. And the community really loves us here, so it's been super fun. Yeah.
All right, let's talk about Zero G Labs now. And let's go back to my introduction a little bit. Why can't AI and other really heavy compute intensive apps run on a blockchain?
Yeah, there's a couple reasons. One is the data throughput, and then 2 is how you do verifiability. So I'll go one by one. So on the data throughput side, if you look at Ethereum, when we started, it did about 80 kilobytes per second in throughput. You look at modern data centers, they do hundreds of gigabytes, even terabytes per second of throughput. So how do you bridge the gap that's like 1 million times? And so we had to architect a completely new way of looking at data throughput. And so we built a very high throughput data availability layer for AI specifically. Each consensus layer can handle about 50 gigabytes per second. And then we also found a way to parallelize consensus layers so you can, in effect, infinitely scale the data throughput. So that enables on-chain AI. Verifiability is another issue because it's how do you enable AI, or how do you verify AI computations on-chain? And so many people tried ZK, maybe OPML. That's all way too slow, too much overhead. And so what finally enabled it is things like TEs, which are trusted execution environments, where you actually have a hardware-based device that then can give you kind of attestations and verifiability. And so that was another major unlock. And so these are physical things on high-end graphic cards. Yeah.
I'm interested in, Michael, trying to understand the challenge we all have, which is convenience versus sort of the right way to do this, right? We think about the fact that we just saw what, was it Anthropic just settled a very big lawsuit around digesting 300,000 or 500,000 books, having to pay out. We know that my previous company, the New York Times, still in litigation with OpenAI. A lot of people want the blockchain to come to AI from a provenance perspective, from understanding sort of both generation of content and ingestion of content. It sounds like you're solving a different problem here. you're really looking at the compute layer. So can you just like break it down for someone who may not understand it as much, why we need to think about this?
Well, we also solve the other problems as well through the design, but just on the compute layer specifically, if you actually want to compete with centralized AI systems or black box AI systems, as we call them, the parts of the stack that we're building, you shouldn't be giving up the performance in exchange for maybe lower costs and so on. So for example, with the verification methodologies that I spoke about, like the ZK ML type of verification methodologies, if you want to have a response from an AI system that doesn't take hours, you need a different verification methodology, basically. And so to make these systems actually feasible on chain, you need the type of performance that we're building. And so in order for it to even be feasible, you have to have the system. So to give another example, we recently published a paper. We were the first to train a 107 billion parameter model in a fully decentralized way. People didn't think it was possible. It's 3 times the previous record. And we did it by kind of parallelizing the communication aspects over the network. And so we have to do many, many breakthroughs, both from a research perspective as well as from a technical engineering perspective once they come out of research, to even make it possible to have decentralized AI and to solve at the same time what you mentioned, transparency, throughput, and so on.
You know, coming back to what Sam just said, he mentioned some of the big centralized players in AI, and it really feels like the centralized players thrive in a system that is murky and not transparent, and that is kind of the basis of these lawsuits that Sam just brought up. What is the incentive for the large centralized players to look at solutions like yours? And maybe there is no incentive. Maybe this is completely disruptive. How do you disrupt the like mass that is what they've already been able to achieve?
Look, we think about AI very differently. We think about AI as a public good. And so with black box AI systems, they are black box for a reason, because you don't want to actually trace where the data came from, or who labeled the data, or what happens under the hood, which version of the model you're even getting. And decentralized AI, it's very much an ownership and a participation model. So even big players, let's say like the New York Times, they could say like, okay, well, I have all these articles, all this data, I can tokenize this data and then make it available to everybody else. And then when the model runs in production, then I can get compensated for it. And so another way of thinking about it is, let's say I have 10 of the best coders for Solidity in my network. And they come together and say, we will build an expert Solidity model. I will contribute my compute, I'll contribute my data, we'll build this model, we'll tokenize it, and then whenever it's being run in production, then I get the benefit of it. Very different from relying on like state-of-the-art models to do that for us over time. This type of model should outperform the state-of-the-art models because it's using data that's not publicly available, that wasn't like ripped off from you basically without you knowing. And so it's a fundamentally different participation model.
Michael, I think a lot about the way that in the NFT world, when there was a lot of hype around a certain project, everyone's trying to mint something.
Right.
And the network slows, and then suddenly the gas prices go crazy. I can only imagine what that feels like amplified when, you know, Jen's trying to write a book with AI, I'm trying to generate an anime version of myself as a 5-second movie. You know, how much of this compute layer is worrisome when we are at the levels that an OpenAI or Anthropic have user-wise?
Yeah. I'd love to answer that by an analogy. So if you look at XAI and how Grok was trained, they put a bunch of compute into centralized data center, 200,000 H200 GPUs. Each one of those does maybe 60 teraflops or so. Now, your mobile device, your iPhone 16, does about 2 teraflops. And so there's about a 30x difference. So you could technically say that Grok was trained with 6 million iPhones. Now imagine you have a network where you can tap into 6 billion iPhones. And so all of a sudden you have much more compute that's much more distributed and not just in one place where that's even a security issue that can then be utilized for compute on this particular network. And that's what we're also trying to solve, is that participation game. Every kind of user should be able to participate on this network, provide their compute, provide their data, and get fairly compensated for it versus get ripped off.
Can you just follow up on what fairly compensated means?
So basically have ownership in the network and have, based on the type of contributions that they've made, whether it's how much compute they provided, what kind of data they provided, kind of reap a token benefit that's fair to that participation. Yeah.
Michael, thanks so much for joining us. It was a pleasure having you at the desk, and I'm sure we'll see you around the conference.
Yeah, absolute pleasure. Thanks for having me.
Thank you.
Awesome.
That was the co-founder and CEO of Zero G Labs, Michael Heinrich. We are going to take a quick break, and we'll be right back with more content from Korea Blockchain Week. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Welcome back to CoinDesk Live. If you're just joining us, we're in Korea. We're at Korea Blockchain Week, and our next guest is at the forefront of stablecoin innovation in the United States. We are talking to the executive director of the Wyoming Stable Token Commission, the government body behind America's first state-issued stablecoin, FRNT. Anthony Apollo, hello.
Good morning. Thanks for having me.
Thanks for being here. Now, before you sat down, we just acknowledged the fact that we've had many conversations all over the world, and we've not yet talked about FRNT in the United States. So talk to me about why it's important to be talking about a Wyoming-issued stablecoin in a place like Korea.
Absolutely. And one of the important things to note is the Wyoming stable token, as we had talked about previously, which is now the Frontier stable token, is going to be available for use everywhere. It's not limited to the four corners of the state of Wyoming. It's one of the reasons we actually renamed it the Frontier token. We had concern that there was confusion, that people could only use this thing in a very small state with about 500,000 people. But really, this is a product and a program created by the state of Wyoming meant to benefit citizens all over the world and citizens of the state of Wyoming from the interest income we generate that goes to our school foundation fund.
Anthony, last time we spoke, we were in London, and I think you were really just debuting the project. Now, fast forward a number of months, not only, I think, has the stablecoin conversation ratcheted up tremendously, and you guys have been a part of that, but also, for example, when we were in Rio last week, we met with someone who was talking about Brazil wanting to offer their own coin, Drex. And a lot of others are sort of, I think, starting to see the opportunity that aligns, especially when you think of how easily these could be composable and tradable. And I'm just interested in how you're thinking about not only representing what our FRNT can be, the Frontier token, but how you can use that as a little bit of a framework for what other people can learn from.
Absolutely. So we'll take it kind of local or domestic, and then we'll go global. So since we announced on August 19th that we are live on 7 interoperable blockchains from a technical perspective, everyone's taken a look at the framework that we've created. So we've already created reserves management rules, token management rules, which is a public process. There needs to be promulgation that includes public comment. These things take time, but we've done it. We've also gone through the legislative process. We're amending the Stable Token Act in real time to reflect some of the progress we've made and make sure we've got some optionality of investments we could avail ourselves of, for example, should treasury rates go down. Since that announcement, we've had a lot of local interest from states and municipalities. That was kind of soft interest beforehand from those who are really involved in this space and working on their own respective legislation at the state level. Now that's really solidified. And beyond that, we are certainly getting a lot of phone calls from jurisdictions all around the world looking to learn from what we're doing. Obviously, being here in Korea, we've had conversations with a number of members of the National Assembly who are working on their stablecoin legislation, looking to see what we've done as a public entity that's quite different than a privately issued stablecoin or any of the private incumbents. And it's a very healthy dialogue that's happening in real time.
I have a multi-part question here that I think is important to unpack that. Can you talk to us the difference between a publicly launched stablecoin like this, so one issued by the state or a country, and a privately issued one? And then to build off of what Sam just said, we're talking about Drex in Brazil. That was a CBDC. What's the difference between a state issuing a CBDC and a stablecoin?
Sure. So first, to kind of pull away from the CBDC conversation, I'll note that Wyoming does not have a CB. We don't have a central bank. We are fiat-backed and fully reserved. So in that capacity, we look different than a CBDC, which to me has two concerns. One is your fingers on the trigger of the money printer, And we can't create currency as a state. Again, it's fully reserved in the same way that USDC from Circle and many others would be. So we're already moving away from that kind of central bank model. The second comes down to privacy. There's a lot of concerns with CBDCs around the level of surveillance, the level of interdiction. I get asked questions on public commentary periods about social credit scores. That's not what we're building. Wyoming cares greatly about privacy. We already have a bill on the books in the state where you cannot be compelled to give up your private keys in a civil or criminal proceeding because the state cannot compel speech under the First Amendment. We've taken that kind of model and applied that to the Wyoming stable token model as well, which is to say we permit it to be used for any lawful purpose. Any kind of interdiction or freeze and seize would need to be downstream of a valid court order. So we can't unilaterally start freezing tokens, reaching into your wallet. It's not something that we're able to do. And that's kind of the big differentiator, or big pair of differentiators from a CBDC. Now, from the view of other jurisdictions issuing their own tokens, what I'm quite excited for is the ability to do liquidity pools that are perhaps sponsored by different nations or nation states. I've been traveling a bit more. Again, the last time we spoke was in London, which means throughout the year I've been getting housed at airport kiosks and at my local bank when I need to go order foreign currency, and then there's no fees. They just give it to you for 20% less. Right. Having liquidity pools where I can contribute a USD-based frontier stable token to one side and pull out a stable one on the other for international travel, I think will have a pretty massive impact on Forex markets, liquidity of foreign currencies, and really espouse kind of real-time price discovery for all that. You're kind of taking away the arbitrage model and making it much more transparent of a system.
Anthony, our last guest mentioned the idea of AI being a public good. I think a lot of people would look similarly at something like a stable coin could be a public good, because I love what you just said. It reduces so much of all the hidden fees and sometimes the very obvious fees that are involved in this. I'm interested in how, and you mentioned this last time we spoke, but how the usage of the token also benefits the people of Wyoming. Because I think also there's a model there, whether it's the people of Wyoming or it's the trees that give us oxygen, right? Like, we can programmatically help things that need help and solve some real world problems. So tell us a little bit more about the Wyoming, how Wyoming benefits itself from the token.
Sure. So from the kind of overt perspective, we are a fully reserved stable token, which means that the dollars come in, we invest those into short duration U.S. treasuries, repurchase agreements thereof. Those bear some percentage of interest. When that interest income gets generated, it comes back to the state. We do have a couple of steps in this waterfall where we do over-collateralize the token up to 2% before we can start returning that funding to the state. But every quarter, we have a remit to sweep that balance to the school foundation fund. I don't like to throw around numbers too much, but if you look at the profits that Tether had last year of $13 billion, Wyoming's state budget for 2 years is $11 billion. So if this pie really continues to grow and we're even a fair percentage of that, we could have a material impact on the state's financials and the taxpayer base. I'll also quickly note that we've been working to have a couple of pilot programs for Wyoming domiciled companies that have blockchain-enabled platforms to see how they can use the Frontier stable token. One that has a bit of a rural taste to it, again, very impactful in Wyoming. It's called Cattle Proof. They're a USDA verified platform. They've testified in front of the Senate Agricultural Subcommittee on Digital Assets and Rural Markets. They already post steer data to IPFS. Now they're looking to move that data with value, and that's where we come in. So doing examples like that and pilots like that will show both how you can use this operationally, and again, what the macro is for the state of having that interest income come back to us.
Anthony, thanks so much for joining us at the desk. It was a pleasure chatting with you again, and I'm sure we'll see you around.
Pleasure as always. Thank you.
Thanks, Anthony.
That was Wyoming Stable Token Commission Executive Director Anthony Apollo. We are going to take a quick break, and we'll be right back. Welcome back to CoinDesk Live. We are coming to you from Seoul at Korea Blockchain Week. We're going to talk about DeFi now. Now, navigating the world of DeFi requires a deep understanding of technology, market structure, and risk management. Our next guest has successfully managed all three. His career has taken him from designing Pentium chips at Intel to leading venture capital funds. He's now the Chief Investment Officer and Head of DeFi Strategies at Monarch Asset Management. Sanat Rao, welcome to the show.
Thanks for having me, Jen.
Thanks for being here. Now, I just want to highlight something. The value of IRL conferences. You and I actually met on the plane into Korea, and now you're sitting here at the desk. I want to say, if you sent me a message on LinkedIn, I might have just ignored it for a year or something.
So, it is incredible.
It's good to be cooped up for 15 hours together on a flight.
So you can meet your colleagues in the industry.
Sometimes things were just meant to happen.
Yeah. Exactly. All right, you are on a panel. I believe it's happening right after this interview. It's called Making Sense of Macro. Talk to me about the major macro trends you're watching in this region and outside of it.
Yeah, so just as a background, Monarch Asset Management, we are a classic multi-strategy investment manager in the crypto space. And I run the DeFi strategies at Monarch. And so everything I look at is from the lens of DeFi and yield. And so one of the things that really impacts DeFi at the macro level is the Fed monetary policy, right? And it is interesting. So the Fed, as we all know, Fed dropped interest rates, they cut interest rates by 25 bips last week. What that does is, it's very interesting about the impact in DeFi. There's two impacts. One is that when the Fed cuts interest rates, the risk-free rate in public markets goes down, which then makes the rate in DeFi more valuable, right? So today you can earn 4 to 6% on Aave and Morpho, and that's great. But when the T-bill rate goes down into the 3.5%, this becomes a lot more interesting. The second thing that happens when the Fed cuts rates is that it becomes a risk on, right? There's a lot more money in the market. People take more risks. They're coming into DeFi. They're levering up on perps, and all that again causes the yields to go up. So for us, if I have to say, the single biggest factor that impacts DeFi yields is the Fed monetary policy. That's what we've been looking at.
And when you think of macro, I feel like yield is what so many people talk about. And do you see a future where TradFi has to start figuring out how to match the yields of DeFi?
Yeah, absolutely. So I think this is one of the big trends, if you will, that's happening, where we're starting to see TradFi players coming into crypto. We've seen that in multiple places. We've seen that on the real world asset side, where we have players like Apollo and I guess Hamilton Lane coming in, they're tokenizing and real world asset products. On the flip side, we actually have the Fidelities of the world who are allowing their clients to be on chain, right? And so we're absolutely going to see that, I think, in the next couple of years, maybe 3 years, we're going to start seeing, I think, that convergence of TradFi and DeFi.
You mentioned you're watching Fed rate cuts. Fed cut rates by 25 bips recently. I think they're saying 2 more rate cuts coming this year. I know you got into DeFi during the DeFi summer of 2020. Are we heading towards another DeFi summer?
Yeah, so Jen, 5 years is a long, long time in crypto. And so, I started my previous fund at the beginning of DeFi summer in 2020. And back then, it's just so different from where we are now, right? So back then, I think it was all Ethereum, right? There were no other chains really with DeFi on it. And gas fees were like, I don't know, $50 to $100 per transaction. There was only maybe about 10 or so DeFi protocols, maybe about 10 million locked in. And there were lots of smart contract hacks. The whole space was very, you were rug pulled. Now we fast forward 5 years out. And to answer your question, absolutely, we are now, I think, in the beginning of the next DeFi summer or the DeFi fall, I guess now. It's literally, so now we have about $150 billion on chain, right, in total value locked. Ethereum is still the leader, but now we have a whole bunch of other side chains where a lot of the transaction happens. So with the L2s, you have the gas fees come down significantly. It makes more sense for people to transact. DeFi has become a lot more institutionalized, right? So we have players like us coming in, we're actively managing funds on chain, we're deploying into vaults. And also, I think on the risk side, interestingly enough, the risk management side, we now have tools like Hypernative that allow you to monitor suspicious activity and get out if something's going wrong. So I'm very, very bullish DeFi, right? Very bullish. And I do think that in the next 4 or 5 years, it's going to get even more institutionalized and way more TVL than there's now.
I'm remembering, though, 2021-ish, where we were being promised 3,000% API on certain projects. There was a lot of like quick money in, do it for a couple of days while everyone else comes in, take it out. And it left a bad taste in a lot of people's mouths back then. And I'm wondering, now it feels much more stable. People really understand what DeFi is. It's not a get-rich-quick scheme. It's really just an investment strategy. But I'm just interested in what are the biggest risks you're seeing today still for those who want to invest in DeFi?
Yeah, Sam, so, the stuff that you mentioned where, you're absolutely correct, right? In 5 years from now, it was the Wild West,
Yeah.
right? And you were getting the 3,000% returns, and people would go in and out, but people also got rug pulled. That's changed a lot, and I'm just going to give you 2 interesting examples, right? One is that we're starting to see protocols like, there's a new app called Superform that's launching, in fact, at this conference, superform.xyz. They are trying to bring the next 100 million, 200 million people on chain. And they started off actually as a yield farming app. They aggregated 2,000 different apps. And now what you can do is they've actually tied up with Coinbase, and then you can actually transfer money and then just deposit. So they become like an on-chain wealth manager, right? So we're seeing a lot of that behavior. And in terms of risks, interestingly, I think the risk profile of DeFi has shifted from smart contract hacks and rug pulls to now depeg risks. You have people at one point were worried about Tether depegging from USDC. Now it's more about, is stablecoin number 150 going to maintain its peg against Tether, right? So those are the things that we now worry about, and in some ways it's a good problem to have, right? I think we've come a long way. There's almost 300 billion of stablecoins, and we still have a ways to go, I think, on the risk side, but literally it's night and day compared to 2020.
Sanat, thanks so much for joining us at the desk, and good luck with your panel.
Thank you. Thanks for having me.
That was Monarch Asset Management, Chief Investment Officer and Head of DeFi Strategies, Sanat Rao. We are going to take a quick break. We'll be right back. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Hello and welcome back to CoinDesk Live. We are coming to you from Korea Blockchain Week. Our next guest is the co-founder and CPO of Miston Labs, the core developer behind the Sui blockchain. He and his team, who were instrumental in building Meta's Diem and Move projects, are building a new architecture for web-scale applications. Adihani Abiodun, welcome to the show.
Thank you very much. Great to be here.
Let's talk about your keynote.
Sure.
It was called the Sui Stack. the coordination layer for apps, agents, and everything in between. We've been talking all about apps, agents, and everything in between right here at the desk. Why is Sui the right blockchain for this?
Yeah, so we were at Facebook building Libra, and one of the last things we did while leaving Libra was building a platform that allows users to own their own data, and basically, Facebook becomes more of a marketplace for user information, where users actually gain ownership of the things that they create. The reason why we have to do that is because the internet is largely non-composable. It's hard to build apps that talk to each other in a very trustless manner. And what we saw at Facebook was a big opportunity. Libra let you send money as easy as email. But we wanted a world where applications can exchange information and transfer value at the speed of light, but as simple also as sending email. So Libra version 2.0 was supposed to be that, but we left Facebook to build Libra 2.0, which is Sui. And what we're seeing, what we're trying to solve is really a new technological stack for builders on the internet. Just like object-oriented programming changed the world in how you build applications, we believe an asset or object-oriented internet is going to really, really facilitate a new form of applications that can be built.
I'm assuming that AI plays a big role in that, right?
Yeah.
We're seeing tremendous amounts of sort of code and AI allowing an everyday person like myself or Jan come up with an idea and be able to build.
Yeah.
How are you thinking of the agentic future with Sui?
So it was not lost to us at Facebook that the world where majority of online transactions are going to be facilitated by agents on behalf of users was going to be a thing. And in that world, we feel Sui is already well placed. And we recently announced our partnership with Google on AP2, which is an agentic payments framework. We work with a lot of large organizations on that. And Sui uniquely allows you to effectively do a batch of transfers atomically instantly, something no other chain can do. So we're already well placed. We're building a lot of protocols as well around making it easy to buy and sell content in a world where content's been scraped left, right, and center. Without content creators, there'll be no internet. So we're building for that future. The emphasis and the importance of a content world where creators are front and center absolutely still needs to be maintained. And in a world where agentic is going to be the method by which we all interact, you still need to uphold those strong tenets of the internet. So the stuff we're building at Mr. Labs with Sui, Walrus, Nautilus are all going to be front and center to make that world absolutely possible.
We spoke a little bit about the future of agentic AI yesterday at the desk, and obviously the Sui stack is preparing for agents to be transacting on behalf of humans, like all of us sitting here at the desk. How soon is that future coming? Like, when are you expecting the masses to be interacting with agents like this?
Well, if you imagine right now, a lot of people are now pivoting towards using, Perplexity and other schemes rather than browsing the internet directly. I barely Google anymore. I just use, an AI agent to find information. The next step will be beyond just getting information, it's to do. And it's a world where the internet is great for humans to read and write. It's okay for robots to read, but it's terribly unfriendly for robots to write. And the stuff we're building at Mist & Labs is providing a set of frameworks that makes it possible for agents to both read and write in that world. So yesterday, Kostas, my co-founder, showed a demo where you can fully control robots using the blockchain in real time. I can trade moves with you. Robots can trade skills with each other. That world is coming faster than we think. So a world where you can share knowledge, share data, trade knowledge, trade training information, which you're doing today on Walrus. You can actually buy and sell AI training data directly on a decentralized storage layer that you can do today on Sui. That world is closer than we imagine. And with the advent of AP2 from Google and a number of other schemes, I know Coinbase just recently announced a partnership with Cloudflare on another form of agentic payments for creators. That world is running at as fast as possible.
How fast, though?
I mean, just look at the lawsuits, right? The amount of lawsuits happening in regards to data, right? Like, creators really need to be able to make a living. So I think it's going to be facilitated by the fact that there's a necessity to have that technology. So, like, those are enough of a signal to say that it's very much upon us very, very soon.
It's not lost on me that many of you came out of Facebook, which really simplified the network activity of the internet and created community. I run our social practice at CoinDesk. When we post about Sui, we get so much engagement. That, the community is so strong, and which is very impressive.
Yeah.
I'm interested in, when you look at a market like Asia, how do you foster such a fanatic community around your project?
So it's no secret that one of the biggest first things we decided to do is go big in Asia when we started the company. We just felt the crypto friendliness and then the openness to new technology was already here in the market. So we doubled down. And in fact, we're probably one of the biggest investors in Korean gaming in crypto, period, right? By quite a large mile. We recently also launched a game console called the Sweet Play 0x1, the first handheld gaming device that lets you play Web 2 and Web 3 games. So we've been very focused in the Asian market for a very long time, specifically also in Korea. So we have a lot of champions in the Korean market for Sui. We have a lot of champions in just Asia as a whole for Sui, because it's an area where we really put as much effort into very, very early, and hope to replicate that everywhere else as well.
I'm happy you brought up the gaming use case, because for a long time it was like Web3 gaming and Sui, always together in the same sentence, in the same headline. Can you talk to us a little bit about how that's growing in the Asian region? I know it's growing faster than other regions, but I think the headlines get stolen a little bit when it comes to some of the institutional and regulatory developments. Talk to us about how that's growing.
Yeah, so gaming, we still maintain, is going to be the biggest facilitator of growth in crypto by far, bar none. There are over 2 to 3 billion gamers in the world. That's a mass population that we're going after. We envisage a world where everything you do on a daily basis will be facilitated by a coordination layer like Sui. So gaming, for us, was a prime investment from day one. In the Korean market, even now, there are over 100,000 daily active wallets in gaming and Sui. There are over 15 live games on Sui already. We recently signed Society. We have a massive multi-world player game that we'll be announcing in October as well. But we keep on investing in gaming, and we believe that this is where you get hundreds of millions of real users that are daily transacting using the chain. Now, I don't like the word Web3 gaming because it puts a notion of crypto to it. Games should just be fun games to play, right? And what we're doing is we build with these game studios. We actually understand the business problems they have, and we're trying to make games easier for retention, lower cost of user acquisition, and just pretty much augmenting the experience to make it something more retentive. So yeah, I can't wait to explain and share more about what's happening in this space, but we're seen now as a destination for gaming, like no other chain. Sui is literally seen as a destination when you want to do anything serious in the gaming space.
My final question for you is related, which is really about, we've been promised the ownership economy now for a bunch of years. And again, you guys are playing at the level to figure out and be able to, I think, inform us what that really is going to look like. I think people were overly optimistic that I'm going to own everything and be able to benefit. What do you think 3 years, 5 years, gaming, creators, how does the ownership economy actually work?
Yeah, look, it's if you imagine what happened in gaming, right? We had a world in gaming where you had to pay to play. Then it became the free to play. Now it's going to be play to own, right? It's really nothing more than an experiment to try and find out new economic schemes to fund gameplay or to fund the franchises for games. So we think the element of ownership economy is really nothing more than another attempt to try and find a new economic model for gaming. And we're sitting there at the forefront, right? We believe there's a world where users get to own assets of the games. And there are worlds where it might not make sense, where really all you really care about is the ability to maybe show off a skill or talent that you have. But there are games, look at Roblox, for example. My kid is always buying and selling all sorts of stuff on Roblox, right? So there's a new generation that fully believes in the element of ownership, and I think that's going to translate in gaming. So that's going to take some time to become real. But we have a number of partners that are already basically building decentralized in-game sharing economies where I can trade a sword with you and I can lend a sword with you for economic value. But that's something that users are already demanding, and that notion is not lost to them. So it's just, we've had poor examples in crypto at the beginning. And I think now, when you merge real gameplay with people who have built games for decades and have franchises that have grown billions of dollars, I think we'll find the right mix to actually solve those problems.
Okay, quick last question. When you say gaming, do you imagine gaming as traditional gaming, or is it a blend of the digital reality and physical reality? And I hate to say it, but does the concept of metaverse almost come back into the gaming that you imagine Sui powering years down the road?
So what we're seeing is you're going to have a merge of, and that's actually a good question, you're going to see a merge of AR, VR, AI and agentic payments, the notion of ownership. All these things that we've been talking about for a very long time, they're all going to find a melting pot and be used in gaming and other aspects as well. What Sui's positioning itself to be is that layer that lets you coordinate all these things together with a single programming language. The internet is not built like that, right? The internet, the stack that we use today is forcing you to pick 5 different tools and try and tie them together with glue. But the world we're going to is you can use AR, VR, you could use AI, you could use all forms of whatever you want to use, but do that on a single platform. And decentralized platforms are actually way better to solve those problems than centralized institutions. So we feel really good about our prospects there. So yeah, I do believe in that world coming in a Ready Player One kind of institution that we've all talked about, but I think it takes some time. There's still user behavior that has to change alongside that as well.
So the metaverse is coming back, is what I'm taking away
I'm ready.
from that.
Yes, it's
I am
coming
ready.
back.
Denny, thank you so much for joining us at the desk. It was a pleasure.
Always a pleasure. Thanks so much.
That was co-founder and CPO of Miston Labs, Denny Abiodun. We're going to take a quick break. We will be right back.
Thank you.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Welcome back to CoinDesk, live from Korea Blockchain Week. We are having so much fun here at the desk. I'm Jen Sanasi, here with Sam Ewan. Sam, my big takeaway is that the metaverse is coming back. It never went anywhere. We just had to think about it a little differently.
I mean, we had TJ Miller at the desk yesterday, who I watched Ready Player One on the plane over to Korea, so I'm fully in metaverse mode. I also noticed that Adieni was wearing the Ray-Ban glasses while we were talking, which I was thinking, is he streaming this to his fans and making money off our content, which to me, I'm good with.
That's interesting, Sam, because you were working on a privacy series at CoinDesk, and I was going to ask you, you noticed those Ray-Ban glasses. Did you feel like there was maybe a privacy infringement there?
Well, you know, those are supposed to indicate when we're being recorded. So unless he hacked that, which I wouldn't put it past someone of his,
Don't accuse
his
him
technical
live on
skill.
air.
But then no. And I think consent is core in everything we do in crypto.
Yeah.
So I think it's really important. But I think we are in a world where our visage, our words are being used in any way possible. Mm-hmm. And I think we just have to accept that that's what life is in 2025.
I don't know if you remember, but at a recent consensus, I want to say it was a year or year and a half ago, I tried I forget which company, it might have been Apple's VR goggles on, and they didn't work. I was just in darkness. And I bring up that story to highlight how quickly things are evolving. Like from that thing that didn't work, I couldn't see, it was so heavy on my head, to Adeneye sitting beside us with his Ray-Ban glasses on, and we couldn't even tell.
All you had to say was trade Bitcoin at that moment, and it would have been something. Speaking of trading Bitcoin,
let's get to our next guest.
Well, I want to get to our next guest, but I just want to say we are in Seoul, Korea, home of barbecue in this region. Our next guest is from the home of barbecue in the U.S., so I think we should ask him his opinion on Korean barbecue.
President of American Bitcoin, Matt Brzak, what is your opinion on Korean barbecue?
An excellent question. You know, they do things differently here. It is delicious. While in Korea, you know, I say when in Rome, do as the Romans do, and so I've sampled the goods, and I have to say they are delicious.
But better than Texas barbecue?
I'll be bipartisan and say everyone's a winner. I want Korean turf. I love what we've got cooking back home, but it's pretty good here as well.
So diplomatic.
I love it.
All right, let's talk about American Bitcoin. I've asked a version of this question a few times, but why does American Bitcoin need a presence here in Korea? What is the reason that you're at Korea Blockchain Week? What do you hope to achieve?
Korean Blockchain Week for us is actually representative of Bitcoin diplomacy. So obviously American Bitcoin is American in name and American in values, but it's a message that we want to export overseas. And so speaking at the conference yesterday, seeing the energy in the crowd, it's very clear that there's a global movement towards Bitcoin, and American Bitcoin is positioned to be a global leader with an American name.
You know, Bitcoin is the biggest brand in crypto by far. You know, we look at search volumes at CoinDesk. We see the people who are obsessed with Bitcoin, any movement here and there. I love the fact that you guys are here, being able to spread your message. You said there was a lot of energy in the room. What do you think they took away from it that really they could adopt here?
I think that the Korean market's really excited by the opportunity to gain exposure to a new form of Bitcoin. So obviously, Bitcoin is sort of the original crypto in many ways, a decade plus of a blockchain. But the American Bitcoin story as an accumulator is something new and exciting in what has been historically sort of an older cryptocurrency, right? So the opportunity for us to provide treasury as well as a mining exposure to folks that not just want Bitcoin exposure, but Bitcoin accumulation is really compelling.
Let's talk a little bit about the buy and hold approach, because I think you can build on what you've just said there. I believe it was in your talk yesterday. Talk to me about how you're talking to investors about moving beyond the buy and hold approach and how American Bitcoin solves that for them.
At American Bitcoin, we've been building a business on the Bitcoin standard, right? So our revenue is in Bitcoin, Bitcoin mining. We also have access to capital markets. We went public on NASDAQ about 2 weeks ago. We've had a very vibrant growth in our shareholder base. I think as folks are trying to understand how best to approach Bitcoin, get off of zero, whether institutions or retail, they're looking for something that's got a little bit more torque than you would find in a standard ETF. I think the ETFs are a really promising vehicle for traditional finance to gain access to the Bitcoin world, but we're already thinking ahead in the markets, and what's coming is going to be more accumulation via treasury, et cetera.
Well, talk to me a little bit about the difference here. If I'm looking at American Bitcoin, I'm thinking about some of the other Bitcoin miners, or about Jack Mahler's company, 21 Capital. What's the difference? What's the competitive advantage that American Bitcoin has for the investor?
With American Bitcoin, you have the best of both worlds. So in one side of the Venn diagram, we have the mining business, very, very asset light. We really only have the machines there and a very small staff. So the investors are really only gaining exposure to the hash rate that powers the Bitcoin network. On the other side, we have a huge treasury that we're growing as rapidly as we can to accumulate that Bitcoin. And our North Star is Bitcoin per share. So on one day, we're mining, we're gaining daily Bitcoin accumulation. On the other, we're able to do these big buys in the capital markets, and all of that is in service of this goal, this BPS, Bitcoin per share metric, which is a new and exciting way to approach the Bitcoin space.
Matt, I'm going to show my age here. I started getting involved in Bitcoin in 2013, and I think my first entry point was about $250. Goes up to 1,000, goes back down to 100. I remember buying it at 60,000 and dropping to 3. I'm really interested in how the everyday investor who's going to buy a share of ABTC is going to ride the volatility waves, which we in this industry, we're used to it. And I think a lot of us who are very committed to the Bitcoin ecosystem, we kind of shrug it off. But to mom and pop who are buying a share, who see their worth go up and down, how do you guide them to understand that Bitcoin isn't up, but it's a bumpy up sometimes?
I think that's an excellent question. As you think about the everyday American, they may find the volatility of Bitcoin, frankly, eye-watering at times.
Yeah.
For us in the industry, that we know that we're slowly, or not so slowly, ascending upwards, even if we are admittedly taking the scenic route to get there. For the everyday American, I'm not sure they're ever going to get fully comfortable with Bitcoin's volatility, but Bitcoin's volatility is actually sort of subsided a little bit. By crypto standards, it's started to subside. As we've seen gold go up a double-digit percentage every year, volatility is not something that is unique to Bitcoin. And I think as we live in a more volatile world, Bitcoin is finding its place in that constellation.
Sam just told the story about how he got into Bitcoin. How did you get into crypto? What orange pilled you?
Orange pilled eyes. So I'd started my career at Bain & Company as a consultant, and I was on projects related to distributed ledger technology, which is the very corporate way of saying a blockchain.
Yeah.
So that got me really interested in the idea of programmable currency. What can be done? What does the future of finance look like? And at the same time, I was actually living in Indonesia, and when I was getting paid in rupiah, I was watching the price action ping pong all around, and I started to wonder a bit about what's going on with fiat currency. And the more I learned, the less I felt I understood, and I realized something seemed kind of broken in the traditional system. And next thing you know, I'm big on Bitcoin. So here we are.
I want to pivot to mining. Mining, I think, is still a really fascinating topic for so many. We have a ton of miners that come to our events. There's miners all over the world who are trying to sort of monetize the hash rate, as you mentioned. What do you think is the biggest challenge facing the mining industry right now?
The mining industry is all about being the lowest cost operator. So as far as crypto goes, it is about operational discipline in a way that few other blockchains really focus. That's created a somewhat scrappy culture. So by the standards of cryptocurrencies, sometimes we're seen as a bit old school because we're this ancient Bitcoin currency, but at the same time, our relentless focus on driving down energy costs and growing our fleet of computers has really put us at the forefront of the energy markets as well as semiconductors, which is an interesting way for us to approach the technology and has really inspired that degree of operational discipline we need to succeed.
Talk to us a little bit about mining moving forward. You know, for a long time, we were seeing miners diversify into things like AI chips and compute centers. Do miners still have to kind of be thinking about their business strategy as we move forward and diversify into things outside of that?
It's an excellent question. So at American Bitcoin, we're partnered with Hut 8. That's our sibling company. So Hut 8 is a next generation energy infrastructure platform. So their team is thinking all day, how do we monetize the electron? At American Bitcoin, our mission is quite simple, which is accumulate Bitcoin.
Yeah.
So for us, while we're always finding new and interesting things to do with that Bitcoin or ways to grow that stack, there are no side quests. Bitcoin is our main goal.
No side quests.
No side quests.
Ever?
Bitcoin. It's in the name.
Matt, my next question goes to a lot of people are looking for additional uses for Bitcoin, right? Whether it was NFTs and ordinals on one end, or it was stable coins and micropayments. How much do you see your tolerance for trying out these new things that might cost you some Bitcoin, but actually might bring more back in?
That's an excellent question. I think being at the frontier of Bitcoin requires constant education. So it's not easy to you can't just plug in your miners and hope for the best anymore. You really want to stay relevant. You really want to stay open to what's out there. We're attentive. I think you've seen this emergence of Bitcoin finance or BTC-Fi that is starting to come. I believe that could be a huge theme into 2026. We'll be assessing, and we'll see what we'll do.
Matt, thanks so much for joining us at the desk. It was a pleasure.
Wait, Jen, we have to ask. We have Matt from ABTC here.
Okay, tell me.
Matt.
What is it we have to ask?
End of year, what's your price prediction?
Oh,
Oh boy. Well, the way rates are going, we're going up. We're going up. We've set a floor in the six figures, and we'll just keep rising from there.
how far up? Arthur Hayes told us 250,000 by the end of the
250,000.
year.
All right,
Higher or
well,
lower?
We'll follow that all the way up. 250 sounds great to me.
Okay, I love that. All right. Matt, thanks so much.
Thank you.
That was the president of American Bitcoin, Matt Pruzak. We are going to take a quick break. But actually, Sam, before we take that quick break, did you still have the Bitcoin you bought at $250?
I do.
You do?
I do.
Sam, a secret multimillionaire. All right, we're going to take a quick break. We'll be right back.
All right, someone get me
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.
Hello and welcome to CoinDesk Live. We are at Korea Blockchain Week. And like I said, we've been having so much fun at the desk. I'm Jen Sanasi here with Sam Ewan. Sam, I am just so curious about your Bitcoin origin story. You said you bought $250 way back when. What got you into Bitcoin?
All right, I didn't actually say I bought it at that point. I said that was the price.
I see. I'm putting words into Sam's mouth.
I owned a creative agency. We were very interested in technology. And myself and a few friends bought a butterfly miner. And because I owned the company, I was like, I'll pay the power. And we put the miner in our office. We let it go. It was obsolete within about 5 months. But out of it, we got a number of Bitcoin. And that was really the start of the journey. I still hold my allocation from that. And it really just started me on a path of understanding consensus layers. That was actually what was most interesting to me. Mm-hmm. I will say that back in 2013, 14, even on things like Coinbase, it was very hard to just go and buy. You couldn't just put a credit card in. You had to send things on command lines. And I was not technical enough to do it. If I was, I would probably not be sitting at the desk right now.
Yeah.
But I dabbled enough to feel like I got a good ROI, but also I got the friends I earned along the way.
That's the most important part. It's the most important part. You could have met someone in a parking lot, Sam, and got a USB drive. And
I could have. We heard that story today.
You could have went down that path, but unfortunately you didn't.
I would have lost it. I know myself. But, Jen, we had the Adieni from Mistin. We had Matt from American Bitcoin. We've heard a lot of really interesting stories just today alone. I guess what of these is really exciting you? Are you feeling like we're really talking to folks who are just global in their purview? Matt was mentioning, bringing the American Bitcoin diplomacy to Korea, which I thought was really interesting. What are the sort of bits that are popping up?
I think what's important here is that the conversation around crypto is global. I think when you sit still in the location that you work, it's really easy to just think within the four walls around you and think within the people that you communicate to every day who are maybe building in New York or Toronto. But the conversation is really a global one. And whether you're American Bitcoin or you're, we didn't talk to MapleStory, but a huge gaming company in Korea, you really are touching users from all over the world. And that's the magic of this industry. And so I would say that's what stands out to me. That and the fact that the conversation around digital ownership and gaming and the metaverse hasn't died. And all of these things we're talking about are really kind of coming together to bring back the narratives of years past and welcome us into a new future.
A new future it is. Matt was talking to us about mining.
Yes.
And our next guest knows something or two about mining, and we did not get to ask Matt about how miners are going to manage the halving.
Yeah, we didn't get to ask Matt that, but I mean, Matt talked a little bit about Hut 8, and our next guest was the CEO of Hut 8. She's now the CEO of Reserve One, Jamie Leverton. Welcome to the show.
Thank you. Always good to be here.
I guess Sam has a question for you. How are miners going to manage the halving?
I will say, Jamie, I was at a private talk that you gave in New York City at someone's penthouse apartment. I think it was a year or two ago.
I feel like it was Novograd.
I think you probably know what this was. And I remember thinking, this person knows more about mining than I will ever know in my life. And it was really fascinating. So I want to thank you for that moment. But I do think it's something that I wonder about of how, just before we get into Reserve One, how the mining industry, in your opinion, because you just know it so well, is going to manage over the years the continued halving and the rewards just continually going down.
Yeah, I mean, I think we saw a glimmer of what the future should look like in the ordinals boom a couple of years ago, because really over time, the miners will be dependent on transaction fees. So the more building we can do on the Bitcoin blockchain itself, the more we can support the network and drive transaction fees into the underlying ecosystem. That's going to be critically important for the long-term health of miners, which we need. Miners are responsible for the security of the Bitcoin layer. They're responsible for processing the transactions. They bring new Bitcoin into circulation. They're essentially Visa, MasterCard, and the Mint and security all rolled into one. So a very important part of the ecosystem that will be supported with transaction fees. And as I say, we saw it with the ordinal boom. There's still over 100 years before the last Bitcoin comes into circulation, so we have time, but it's going to be about transaction fees.
I just want to go off script for 1 second, which is, I love that, because I think the ordinals did show us that there can be tremendous transactions on it. Do you think the Bitcoin community understands or gets jealous of the sheer volume of stablecoins that are happening on so many other networks? And is it an area you see that coming to Bitcoin?
I don't like to speak for the industry as a whole.
Your opinion will count.
But we were in Washington last week, myself and a delegation with the Digital Chamber, including Michael Saylor and Tom Lee and lots of people that are really important to the ecosystem. And that thread came up a few times over the course of the day that Bitcoin predates stablecoins, and yet we've got the Genius Act through, and we're still very much in conversation around clarity and the strategic Bitcoin reserve. So yeah, I think there is a little bit of jealousy that stablecoins have kind of leapfrog Bitcoin, and we're still fighting a lot of battles in the Bitcoin world that we've been fighting for years. When we think about the narrative that still comes at us about, Bitcoin being used for illicit purposes. I can't believe that argument is one I still have to deal with on a daily basis, but it's true. And stablecoins have managed to just kind of avoid a lot of that entirely, and now they have proper regulatory clarity, which we do desperately need in the United States and Canada for the rest of the ecosystem.
I guess that really highlights the importance of Bitcoin DeFi. That's been a theme at the desk here today. I mean, from your perspective, what happens if DeFi on Bitcoin doesn't play out the way so many industry players hope it does?
I think it will play out. It's just a question of timing. How long does it take? What forms does it take? I think it's really difficult to say. I go back to clarity, that market structure coming out of the federal government in the U.S. is really, really critical. I think we're all watching that. very carefully and hoping that we see something in the next few weeks come out of Washington that gives us more direction, because really that's what the ecosystem needs to focus their energy and their efforts and their building.
All right, Jamie, Reserve One.
Yes.
Yes. Tell us about it. It's expected to launch in Q4. It's a public company.
Yeah.
What's the thesis? I know it's looking at this digital asset strategy play.
Yes, so we expecting to start trading on the NASDAQ by the end of the year. We announced actually this morning, our time, that we have confidentially filed our S4, so we're in that process with the SEC. I would say I expect a different experience with the SEC than my last go around with the Gensler regime, which warms my heart a bit. We announced our business combination agreement in July. We raised $750 million in a pipe, and then there's $287.5 million sitting in the SPAC trust. We are inspired by what we're seeing from the federal government. So the initial allocation will be 80% Bitcoin, inspired by the Strategic Bitcoin Reserve, and then 20% into an alt sleeve inspired by the digital asset stockpile. So expecting a mix out of the gate of Ethereum, Solana, ADA, and XRP, and that will evolve as we get more clarity from the feds.
All right, so one equity that gives investors exposure to that 80% Bitcoin, 20% other assets. Just talk to us a little bit more about the product. How is this different than some of the other digital asset treasury companies we've seen and some of the other miners who are mining and creating treasuries and investing the yield from those treasuries into other products?
Yeah, so we're the only diversified digital asset treasury company. We've got a really unique management team and board of directors assembled. We are going to be running active yield generation strategies on the assets as well. We're lucky enough to have Sebastian Bea, who is the president of Coinbase Asset Management, on the team as our president and CIO, so responsible for that yield generation. And the other thing we've built into our structure is the ability to allocate up to 10% of our AUM into high conviction venture opportunities. So really giving the investors a one-stop shop for exposure to the crypto ecosystem, where we do the work as a sophisticated management team and board of directors, lots of experience across our team, not just in crypto with myself, Sebastian, Reeve Collins, Gabriel Abed, John D'Agostino, but also private equity coming from Chin Chu and Wall Street, of course, and then Wilbur Ross bringing Wall Street and regulatory, which Gabe also has as the Barbadian ambassador to the UAE. So a bit of an Avengers strategy as we assembled the team.
I was thinking that. Yeah. Are the Avengers of crypto, okay.
It is, yes. I just want to be ScarJo. Trying to make it stick. But yeah, that's the team, and super, super excited to bring it to market. We really think that there's a new class of investors looking for the opportunity to get this kind of one-stop exposure, which you can't get in the other assets that have come to market to date.
Jamie, I'm just interested in the 80-20 play here, and obviously there's a fair bit of maximalism coming out, but that 20%.
Are you accusing me of still being a maxi?
Not at all. But that 20% also is full of opportunity, right?
That's
every one of those projects has a loyal community, has
very
a
much
a big moon opportunity coming. So, is it partly just to say we want to be in the big five and we're going to figure out how to make this really work? Is there some thesis that says maybe this goes 70-30 if we see certain criteria met? I guess, how strict is your 80-20?
Yeah, so it's actually based on a combination of free float market cap with an ability to generate yield override, and that gets you to the 80-20 today. But if that alt sleeve outperforms and the free float shifts, then the allocations will dynamically shift on that basis as well, which would be a good thing. And honestly, I think we should expect a halo to come on to the tokens that are included in that digital asset stockpile once we get clarity, once we see that kind of incremental level of support from the Fed coming to those chains. I think it should be really, really good for the ecosystem and for the builders in those communities, and we're here to support all of the above.
What are the assets in that 20? I know there's XRP, ADA.
Yeah. ETH and Solana.
Oh, I guessed correctly.
You did. Yeah.
Will you be adding assets?
Yeah, based on what we hear from
Yeah.
the Fed, I expect they'll add a few more assets into the stockpile when we get more clarity. Remains to be seen when we'll get that clarity from them. But as I say, we apply the mechanism of weighting. So Ethereum and Solana end up weighting higher just based on their free float metrics and their ability to generate yield. But that's where the management team comes in. And obviously, we're making the best decisions we think for our investors and our returns.
Jamie, thank you for joining us. I know
Of
you have a
course.
stage to get to.
I do. I have to
So-
run upstairs and get on stage, but thanks for having
luck
me.
with it.
Yeah,
Good
great
luck.
to see you guys.
You as well.
That was Reserve One CEO Jamie Leverton. We are going to take a quick break. We'll be right back. Hello and welcome back to CoinDesk Live. We are coming to you from Korea Blockchain Week. Our next guest is building a dedicated blockchain or stable chain to power the future of everyday payments. He is the new co-CEO of Stable, which is on the verge of a major mainnet launch. Brian, welcome.
Thanks for having me.
All right, tell us about this concept of stable chain.
Sure. So Stable's a layer one blockchain. We're focused on building the payment rails to help facilitate the use of stable coins worldwide. We noticed there was a kind of a gap in the infrastructure or a latency in the infrastructure that needed to be revisited. So we've kind of put forth the effort to make sure that we can build a better way to use stable coins with gas-free transactions for peer-to-peer and also predictable times and fees for enterprise level.
Why do we need a stable chain?
Sure. I mean, I think it really speaks to the volatility in gas tokens in existing infrastructure, where if you're trying to move $100, but you don't know what the fee you're going to pay is, that's not a transaction that anyone's used to having. When you send money with a wire, you know roughly what that price is going to be. But with using the current infrastructure of general layer one blockchains, it's sometimes a surprise. You don't know when the finality is going to be. You don't know what the fees are going to be. And so that makes it really hard to have like a ever-growing ecosystem in terms of using stablecoins. And so we really identified that as a problem. So our major issue that we have solved is that we use USDT as the gas fee. So if you're sending USDT, you pay in USDT. And that helps solve a lot of the secondary token volatility that we see in stablecoin payments.
You know, there are other chains that say they are low cost, fast, the perfect place for stable coins. Talk to me a little bit about the differentiator. You started to touch on it a little bit there, but what's different about stable chain against some of those other chains that say that?
Sure. I think, you know, kind of what you're mentioning, the difference that exists, we, as I mentioned, use the USDT to do those settlements. And I think in a general blockchain, what you're going to be doing is you're trying to send the USDT, but you're buying let's say like another token to use that gas token has volatility. So even though it may be low fee, you don't know where that token's going to be. So if someone's trying to remit money from one country to the other, they have to buy another asset and have to incur that volatility. And that really upsets the frequency you do the transactions, because you have to exit the token that has the volatility to make sure you're not spending even more money to do the simple transaction.
Do you think there's a world where you're starting with the USDT, but then you could take other stable coins on and really be, in essence, the platform for stable coins?
Yep. So we run an EVM system. So with that, we invite all currencies that are EVM compatible using layer 0 to come on the network. We're an open network. We are focused solely on payments. So USDT is what we see as, you know, 3/4 of the market of stable coins. You know, that's who our partners are. That's where we're starting off with. But, you know, we also have a backing from PayPal. And so PYUSD is also coming on the network. They're going to be a day one launch partner for us. So we have a wide gamut of who we're servicing. USDT is just like who gave us the idea that we wanted to, or gave us the idea that we wanted to build something better to help them accomplish their missions.
Mainnet launch is coming up this year. Talk to us a little bit about what you're building towards and what's going to be available to folks once you launch.
Sure. So we have kind of like a 3-tier approach in terms of our launch. So we have the mainnet launch, we have like a TGE, and we also have our mobile app that we're launching. So that mobile app is a mobile wallet that will be available in DApp form and also download form. And that allows people to send peer-to-peer transactions, gas-free and instantaneous. So we have built a unique system that allows you to move money peer-to-peer without paying those fees, and we've abstracted all of the problems that typically exist right now. So a lot of people here have sent money with stablecoins, but understand the friction of checking a wallet address, making sure it's the right party, and we identified that as an inhibitor to mass adoption. So while stablecoins have grown, $260 billion AUM, we want to help that get to the $1 trillion mark. And in order to do that, we have to remove some of the last remaining hurdles in the place. So, we identified a couple key factors, and the one thing that we're having launched this later year is that mobile app, and we feel that that's going to make it synonymous in sending money. So if you want to send a USDT across borders, simple download, log in with your socials, log in with email, it's secure, safe, all your wallet information stored properly, but you get to transact instantly when you download.
I mean, look, we were just at an event with Stellar. Tons of people doing wallets on Stellar, a lot of them focusing on stablecoins. Do you think there's a capacity to which at some point we are hitting everything is just a stablecoin wallet, or do you see more of a consolidation? I guess, how do you see the maturation of the stablecoin industry, knowing that really in the end, it sounds like you're building the infra layer behind it?
Mm-hmm. So you're completely right. We look at stables building the stable chain, as you said earlier. That's really what our focus is. The wallet is to help, participate in that industry, help grow that market, help develop that industry. So while there's a lot of other players into the market, I think that's the validation for us to show that we are in the right factor. We are doing what people are looking for. And we want to, as I said, 260 billion, trying to get to the trillion, but that shouldn't be the end mark. We want to keep pushing that number. I know Paulo at Tether keeps talking about what's the next milestone. While that may be the next milestone, I'm not going to be the one to dictate what the next one is after that, but I think there's not going to be a slowdown because I think we all have pain points when dealing with currency and moving across borders.
I want to talk about the wallet for just a second longer. I heard Paulo speak recently. He said that more than 60% of people who use USDT around the world only use USDT. They don't really interact with any other crypto, so they really are using it as their form of currency to, save or spend money, whether that's peer-to-peer or spend money at a local merchant. Is the wallet mainly for those people for now?
Yep, so our wallet, it's a consumer-facing product. So we spend a lot of time, our product team, listening to people, having those interviews, doing some test studies to make sure that we have identified what people have frustrations with current wallet infrastructure and have solved that. Another part of what Paulo's mission is at Tether is focusing on the unbanked or the debanked. And, if 1.3 billion people aren't able to get a bank account, but 900 million of those people have access to a mobile phone, we solve that problem, or they solve that problem themselves already, but we want to help amplify that message.
I'm very interested in thinking about the future of stablecoins as relates to traditional fiat. I think what you just said was a perfect moment there, which is at some point cash doesn't become useful anymore, right? It's a nice to have versus everyone has a mobile device or a glasses or a watch or a chip or whatever this may be. Do you think we are going to reach sort of the opportunity where every stable coin can just be exchanged for each other? Yep. It doesn't really matter. It's kind of the universal just way we, whether it's a euro, whether it's a yen, whether it's a dollar, doesn't really matter. Is that kind of the future vision of what the stable chain will be?
That's what we hope for. We hope that, we want to move money. We want to be a payments rail system. If you want to send whatever currency and it exists, we want to help you do that. So we're not saying that it's only one token or only one system. We welcome all. And I think that's what really makes it cross-border, because at times, while you may be using USDT to transfer internationally because you want to take advantage of a stable currency, the regulation that was provided under the Genius Act, where you understand where it's sitting and how it's being governed with USAT, we want to make sure that if you need to actually off-rail and take that money and spend something that isn't going to take that cryptocurrency, then we want to make sure that's available to you. So we don't want to limit someone. We want to make sure that it's end-to-end, not just peer-to-peer in terms of the transfer. So on-ramping, off-ramping, we want to help facilitate all of that.
We have a little bit of an origin story theme happening at the desk today. What's yours? What makes you so passionate about solving this problem?
Sure. So, I mean, if you really want to get in the origin, both my parents worked in banking. My mom, in the 80s, worked in First Atlanta Bank on the currency exchange desk. So, funny thing, working in finance for the past nearly 20 years, talked to my mom about like the venture side and the PE side that I was in. And she understood most of it, and she had her comments on it. But talking about stable currency and talking about the FX risk that exists, it was the one thing that she really jumped on. She was giving me advice, so that's kind of my origin story about joining Stable, is that I had a familial link to it. But in terms of like my background in finance, I've invested in hundreds of companies, looked at tens of thousands of companies. Previously, I was at Block One, running the ESVC fund there. So that was $1 billion that we dedicated to building out our ecosystem. So been in the space full time since 2017, 2018. So it's fun to be at a company now. It has a mission. We have a go-to-market strategy, and we're ramping up to deliver.
Brian, thanks so much for joining us. It was a pleasure.
Thank you.
Brian.
That was the co-CEO of Stable, Brian Mailer. We are going to take a quick break. We'll be right back.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.
Welcome back to CoinDesk Live. We are at Korea Blockchain Week, bringing you some of the best conversations from right here on the conference floor. Our next guest pioneered the play-to-earn model as the co-founder of Yield Guild Games, creating a global community of thousands of players. Now he's leading the next evolution of that vision with YGG Play, the Guild's new game publishing arm. They're already seeing success with their first titles and are preparing to launch a new platform for the next generation of Web3 games. The co-fownder of Yield Guild Games, Gabby Dizon, joins the show.
Hey,
Gabby,
thanks for having me.
Thanks for being here. Now, you have a shirt on.
That's right.
It says LOLland.
That's right.
Tell us about it.
It's a game that we released 4 months ago. So we came up with this line of games called Casual Degen. Casual meaning anyone can play it. Degen means that it's really for the crypto native crowd. It's done really well in the 4 months since launch, almost $4 million revenue. And yeah, we're just going ahead with a whole YGG Play Web3 publishing line.
Mm-hmm.
I remember when we spoke, we had a great interview a couple months ago. You mentioned also you were doing with Abstract.
That's correct.
I know Luca's coming on later. Tell us about consumer interest. You said this is for the crypto audience.
Yeah, that's right.
But you really also pioneered that, mom and pops were augmenting their money.
That's right.
Back in the day, playing some of your games. So tell us about what it means to be degen versus consumer.
Okay, so I think that Degen is the type of crypto consumer that's here now. We want crypto products to be used everywhere across the world, but the Degens are the people who are looking for different ways to make money in crypto, right? Whether you're trading, you're flipping meme coins, NFTs, and that's the kind of gameplay that we have as well. And we partnered with Luca and Abstract and also with Pudgy Penguins because number one, they have one of the best communities in the world on the Pudgy. So we have community Pudgies inside our game. And Abstract is a consumer chain that has the portal, which is more like an app store than the blockchain. So we're one of the featured apps there. It's been doing great, and it's been a great partnership.
Let's talk about Degens for a second, because when I think Degens, I think very financially incentivized,
That's
right?
correct.
And building a game around that, it almost feels to me like you always have to be incentivizing them to come back, right? Talk to me about that balance between incentivization and just fun gameplay.
Yeah, so I think when you think about crypto native games, you embrace the fact that the fun is in the making money. Of course, not everyone can make money. And yeah, a lot of people have tried to make just fun games and put NFTs to it. A lot of that hasn't been successful so far. I think in a world where crypto is everywhere, we will be there. But for now, I think building for the consumer that is here, which is the crypto degen, yeah, that's been what's really been successful for us so far.
Do you think that's where maybe some of the Web3 games that have failed have gone wrong? You know, there was a long time we heard, you just got to build a fun game. And
Yeah,
the players
yeah,
will
yeah.
come. You just got to build a fun
Absolutely.
game.
And there have been actually a lot of fun games built, but they haven't gotten traction because there hasn't been anything to excite the on-chain crowd or the speculative crowd. And even if you build a fun game, I think there needs to be something that is kind of speculative on top of it to excite the on-chain crowd.
I'm wondering, you know, Gabby, I think we talked about this a while ago, but Web3 games themselves feel a little bit like we had to create a new segment of gaming. When people are already selling and buying items within existing game worlds, virtual economies are pretty commonplace. I think the real innovation was I can play and actually earn something.
That's right.
That earning can be status, that earning can be friendship, that earning can be a currency. Like, it doesn't
That's right.
have to be, right? So I guess I'm interested in how long you think it will take before, and just normal gaming has built in some of these mechanics.
If you look at the younger audiences, like a lot of people on Roblox, for example, they're earning money from games like Grow a Garden, where there's no NFTs, but you earn items that you sell to other people, which looks very much like Web3 gaming, but with a much larger take rate, right? So I think that a lot of these behaviors are very common, like second nature to the younger generation. So as these ones get older, get more exposure to crypto, I think it just becomes more natural. But I think the people who have been building games now, Web3 games with ownership, they're just building for a future that's not here yet.
You know, Sam brought up the play to earn days back in 2020. That really took off in 2020,
Absolutely.
right here in the Asia region.
That's right.
How has gaming evolved here since then?
Yeah, gaming has evolved quite a bit. A lot of people have tried building many different kinds of games. You had the Telegram craze. Now people are doing some good work on abstract. I think people are still trying to find what kind of works and is sticky long term. What hasn't changed is that Asia has been the first region to try a lot of different new things in gaming. Like free-to-play was invented here in Korea, and play-to-earn was in Southeast Asia. So I think you'll see a lot of the new innovation happen in Asia first.
We've had a bunch of conversations today with other folks talking about AI and agentic trading, things like that. I believe you've talked about agentic players.
Right.
And so I'm also interested in, you know, what happens when Jen decides she wants to get into a game, but she just spawns 1,000 different of her to go play and earn and interact with each other. Is that also the future of where gaming is going?
It's a big issue because if you want to reward players, you want to reward real players. You don't want to reward one person that can spin up 1,000 agents, bots, whatever you want to call them. So knowing how to differentiate. And one of the problems with the original play-to-earn thesis was that people were earning tokens based on essentially like labor, right?
Yeah.
But now you can spin up thousands, hundreds of thousands, millions of bots that can extract that value. And that doesn't leave much for the players themselves. So you have to be able to differentiate who is a real human and who isn't.
Do you think we'll get to the future where we are differentiating who a real human is in this context? Or will gaming evolve to what Sam was saying, where, you know, people are spinning up agents, they're playing games online, and people are doing other things?
Absolutely. Those types of games are, I think, a different class of games that is coming. So, for example, I am the coach and I spin up a lot of different agents with different personalities, and then they can win, they can lose. And so like I'm more like a coach than player. We've seen some of those games come up now.
But, you know, because I think a lot about the online poker boom when it happened.
That's right.
I used to play a lot of online poker. And at some point, you know, if you were sophisticated enough, you would get a heads-up display where I could understand your strategies and your percentages of doing different actions, and I can make decisions based on that. So I could see one world where AI is just saying, oh, I've played against Gabby before.
Right.
And I kind of know that he's a conservative player, so I might be a little more aggressive. I think that's okay. I think that's just about edge, right? There's a big difference between that and saying, I'm just going to spin up bots. So the real thing, I think, feels like proof of humanity. You know?
Very
How do
much
we use
so.
something biometric or whatever it may be? And I think a lot of people are asking for that. You know, I know Elon had that big row recently where, you know, people found out other people were playing his characters.
That's right.
He just wanted the status.
Yeah.
And he kind of took it in stride and never really admitted it. But I guess, does the gaming world itself want to be playing with other humans, or does the gaming world itself want to just say, no, I just want to be the best and I need to do whatever I can to get there?
I think playing against and winning against other humans will always be the premium option. It's like when you're going to the Olympics, you don't want to compete against robots, right? You want to make sure that, everybody trained and did their best and was clean, and I won against them. So I think that aspect would never change. But yeah, there's more and more aspects of gameplay that are taken over by AI, and I don't think we've seen a breakout hit of what that truly looks like. But yeah, I think those types of games are coming soon.
Gabby, you touched on something that I think maybe isn't talked about enough, but gaming is very social. It's more social than social media. People really enjoy hopping into games and,
Very much so.
and building relationships there, much more so than in real life. And so I think what you're saying is like really spot on.
Yeah, I want to talk to, beat other people. I want to, I want to do trash talk. I don't want to trash talk against a bot, right?
All right, we saw this past year a very successful Minecraft movie came out.
That's right.
Right? So, Gabby, who's going to play you in the Lowland movie?
That's a good question. I think that's something to ask our community.
Gabby, thank you very much for joining us here at the desk. It was a pleasure. I heard we're going to be seeing you at Consensus in Hong Kong early next year.
So see you in a few months.
We'll see you in a few months.
Always a pleasure, Gabby.
All right.
That was YGG co-founder Gabby Dizon. We are going to take a quick break. We'll be right back.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Hey everyone, you are watching CoinDesk live from Korea Blockchain Week. I'm Jen Sanasi. I'm here with Sam Yuen. We are winding down to the last couple interviews, Sam, but the vibes are still vibing here at Korea Blockchain Week. You can't see around our desk, but it is packed. And I have to say, Sam, usually on day 2 or 3 of conferences, people start to kind of do their own thing outside of the conference. They start to get tired. Maybe they partied a little late the night before, but this place is packed.
Yeah, we were at a amusement park called Latte World.
You were.
Here.
Talk about partying a little too late.
It went till 5 a.m. and it was packed when we left around 1. I don't understand how people were still doing it. I just needed to go to sleep. But yeah, this has been a great event for us. The venue's been buzzing with energy. There's a lot of folks happening. I've been just really impressed with the speakers we've had.
Yeah.
Gabby's always a great guest, really understanding the gaming side, but then having Jamie, who really understands mining, the American Bitcoin guys. I mean, I think we're really hitting all the sort of key layers. Even, was it Brian from Stable? Stablecoins are such a big conversation right now. So I think the key themes that we've been seeing over the last couple of events, which we'll see they resonate also in Singapore, have been Bitcoin, number one, stablecoins, number two, consumer adoption. Korea clearly is a big moment for consumer adoption. And then just understanding that like the infrastructure needs to support this to educate. What's your highlights been so far?
I mean, I think you're right. There's been a large variety of conversations happening here. I think from where we sit, when we talk about the Asia Pacific region, we talk a lot about Singapore, we talk a lot about Hong Kong. We don't often talk a lot about what's going on in Korea. You know, it might come up in a market segment where we talk about trading here in Korea or the kimchi premium. But being here has been just incredible to see all of the problems that firms that are not even based here are solving for Koreans, and the willingness of Koreans to adopt new ways to solve their problems has been really cool.
You know, we heard Charles Hoskinson yesterday say 35% penetration of people who own crypto in Korea itself, and a very tech-forward group who are really looking to utilize technology to better their own lives. I believe our next guest has a thesis about Korea in terms of both its penetration of technology, but also its connection to the Web 2 world. So maybe we should introduce him.
We sure should. He does have a thesis about Korea. Our next guest is a founder who has successfully bridged the gap between the digital and physical worlds, turning an NFT collection into a globally recognized brand. I knew that it was globally recognized when my friends who know nothing about crypto started sending me Pudgy Penguin TikTok videos. He's the CEO of Pudgy Penguins, a project that has pioneered the use of Web3 IP in physical toys and retail, and the CEO of Abstract. Luca Netz, welcome.
I'm super happy to be here.
All right, let's talk about that thesis. We were talking a little bit before we went live on air. Talk to us about how you are taking in Korea. What are you learning?
Yeah, it's been an amazing trip over the last 4 weeks. I've been in Asia, just bouncing around to city. I think from my perspective, I think I had a really interesting epiphany that I was telling you guys about just a second ago, which is I always knew Korea was super forward in how they looked at crypto, how they looked at technology and AI. But what I didn't realize was how big they were in culture. And I actually think Korea is becoming the epicenter, not only of Web 2 culture or Web 3 culture, but also Web 2 culture around the globe. And so there's a couple interesting statistics that I learned over the last couple of days that I think I should share. Of the top 10 women on Instagram, 8 of them are Korean K-pop stars. Of the top 10 music videos that have released in 2024 and 2025, 9 of the 10 are most viewed are Korean K-pop stars. Obviously, you just saw the success with K-pop Demon Hunters, Netflix's most viral movie of all time. And just maneuvering through the city the last couple of days, it's evident to me that this is really where culture is being conceptualized in the East. But not only the East, I think the rest of the world. And so I'm super fascinated. Obviously, you know, Igloo, the company that holds Pudgy Penguins and Abstract, our whole mission is to own culture and crypto. I think we are the team that is most well positioned to be the cultural hub for the industry. And so it was super fascinating to watch that. And then the statistics on the crypto side, you'd mentioned, the kimchi premium, but I actually think it's a lot more serious than that. You know, last year or in quarter one of 2025, the KRW traded about $456 billion in denominated asset pairs in terms of trading volume. The US dollar between USDC and USDT traded about $480 billion. And so the entire globe who's using US dollars, right, to trade is barely beating the KRW denominated trading volume. And they're really close. And so it's just clear to me, man, that I think the energy here, the desire to want to be at the forefront of innovation is frankly, I think, bar none to any other place I've been in the world. And I'm super excited to, be one of the companies leading the charge and, pushing both blockchain technology and IP in Korea.
Could we get a Pudgy Penguins K-pop collab?
Oh, so Triple S, which is one of the bigger K-pop groups, I think top 6 or 7 in all of Korea, is actually working and building on abstract chain rails, and hope to do some Pudgy Penguin stuff with them here shortly.
You know, look, I think it's really salient what you mentioned, because I think I started paying attention to Korea about 20 years ago when they really decided that they wanted to make their culture go global. It was a very defined initiative from the government on down, and we saw it with Psy and Gangnam Style. We saw Korea barbecue open up all over the world as spicier flavors became indoctrinated into cuisines. I think there's something around a community and a culture and a country that decides we want to be expansive that is very different than we often are used to. We are seeing in America, obviously, there's a big push towards crypto as an American brand now. And so I'm interested in your thoughts on America is pushing crypto as we're seeing the top level of the administration. Then you come to a place like Korea and you see how much they support their communities and culture. Is it the desire that we need these big communities to be working together, figuring out how this works as a global institution as opposed to sort of segmented by borders?
Yeah, unfortunately, I think just by proxy of the different cultures, they will be segmented by borders. I think that's just a human problem, not a crypto problem. But I do think that America is becoming the institutional hub for crypto, but it is unequivocally clear to me that Korea is the retail hub for crypto. I mean, they're treating, there's esports, perps, competitions going on in Korea. There's thousands of people sitting in gaming conventions playing Web3 games. All the people that are coming to our events, I do this thing where I think it's just the right thing to do, but when people come to our events, I'm in the line with them, shaking their hands, greeting them. But one thing I'm also doing while I do that is I'm just observing and understanding who's coming into our event. And it's all 18, 19, 20, 22, 23, 24-year-olds. And you can just tell that, internet native generation is very much taking crypto extremely seriously, almost like a lifestyle. The interesting thing about Asian culture is Asia really cares. They care in a way that I think Americans simply do not, and I say this as an American. They just have an attention to detail and a passion for things that they ingrain it into their lifestyle in a way that I think Americans just don't. And you can just tell that crypto is not just a thing that they do when they go back from work or, they spend 20 or 30 minutes, at the end of their day. They really treat this like a lifestyle through and through. And it's beautiful to watch because I do think this industry is a lifestyle if you really get into it. It's 24/7, it's super fast paced, the cadence is incredible. And so it's just super refreshing to see this mass cohort. It's not, and you mentioned the Charles statistic, you're completely right in that. 35% of people in Korea have traded crypto before. I mean, that's insane. You can basically walk down the street and every 5th person probably has heard of Pudgy Penguins it's like crazy to think about. And it's just something that I think a lot of founders need to take more seriously. And I have a call to action for the Korean community. I really encourage Korean entrepreneurship to take a leg up in terms of really focusing on crypto and Web3. There's not as many Korean crypto entrepreneurs as I would like to see. And just figuring how powerful this entire community is, this city, this state, I think it's just one of those things that I would love to see more of, and I'd love to support more Korean builders.
All right, Luca, just before we go, we had Ovi from Rect yesterday. We just had Gabby from YGG on before you. I know that they are collaborating with you over at Abstract. For our audience watching at home, talk to us about how Abstract is bringing the model that you've kind of perfected to these other firms.
Yeah, I think Abstract, acts and its purpose is to sit as the consumer layer for Ethereum. And when I think about the consumer layer, I think 2 things in terms of problems to solve. I think the first one is the consumer journey. The consumer journey is broken in crypto. I mean, even functionally, you making a simple trade on Uniswap, you've got to go to a MetaMask, download the extension, figure out how to fund, get pushed to maybe a MoonPay or some other on-ramp provider to onboard your dollars there. Then you have to go to Uniswap. Then you have to connect the wallet. Then you have to swap. The process is too egregious. I believe in one centralized front end in which you can do everything on chain. I think the chain itself has to be decentralized, but I think the front end and the experience that everyone uses has to be centralized. I think decentralization and consumer adoption are antonyms. They mean opposite things. But I don't think you need to compromise the integrity of the financial infrastructure that everyone at Ethereum has been building for the last 10 years or 8 years. And so I do believe in centralized front ends. I think we're one of the pioneers and innovators of that in our portal product. And it has allowed us to, basically take builders like Gabby and, put them on the front page of our end user engagement platform and just, push builders to go and ultimately get PMF and to bootstrap their product. And then on the other side of it, we are really focused on just really trying to bring fun back to the EVM. I think when you think consumer, what is the first thing that's going to break out in consumer? I don't think you need to reinvent the wheel. I think every great consumer product that's broken out up until this point, OpenSea, Pump Fun, you name it, has been a fun product for the end user. So we just want to own fun. We want to bring fun back to the EVM. And those are the first two problems that we're tackling here over at Abstract.
I mean, no one knows consumer crypto like you. I feel like you're the face of it. So thank you for all the work you've done as well to bring it.
Appreciate you guys.
Luca, thanks so much.
Thanks for having me.
That was Pudgy Penguins and Abstract CEO Luca Netz. We are going to take a quick break, and we'll be right back.
Cool.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters.
Hello and welcome back to CoinDesk Live from Korea Blockchain Week. We are getting to the end of the show. A couple surprises. Yesterday we had Gary the dog.
Yeah.
Later on, it's not going to be a dog, but it will be something.
You got something coming. All right. Good to know.
Sam, I really think the conversation around Korea's crypto footprint is becoming very, very solid. And I'm so happy that we get to bring this conversation to our audience at home who may not have been able to travel to Korea Blockchain Week. This is the fourth time this is Korea Blockchain Week has happened, I believe. And I think it's only going to grow and become bigger.
You know, I thought Luca said it really well. He's not the only person who sat at our desk who's talked about how passionate they are for the Korea market. So I think we are looking at the Korea market in the same way they are, which is there's a movement happening here. You know, we do our event in Hong Kong. We would love to work more with the folks over here at FactBlock and KBW to like sort of bring this energy to our event and vice versa, like we're doing. We know Singapore is a big moment. Asia's at a level that we under anticipate in the US in terms of its opportunity for crypto brands, for traditional brands coming into the space. So I think we've heard a lot about it, but I think we need to, as Lucas said, like put the gauntlet down. We need more builders making things that we can get involved with, that we can cover on our channels, and we can understand that Asia is going to be a big player in the crypto space in the same way America, Europe, LATAM is. I'm really excited.
Even in the programming for this show, we really wanted to highlight Korean builders, folks who are making an impact right here on the ground. And I'm not saying that they don't exist, but it was tough to find them. And so I think you're right. You know, you can only solve problems for the people you are around. I think you understand those problems the most. And so I would love to see more Korean builders come out of this space. And I just want to add one thing to what Luca was saying. As you know, I lived in Korea just for a year, a long time ago. But the Koreans are very passionate and dedicated to the things that they are dedicated to. And we talk about K-pop, right? When I first learned about the machine that is behind K-pop, it was absolutely insane. We're talking about K-pop schools, the training that goes into creating some of these major artists and major bands that go on to be so successful on a major stage is no joke. It is a business, I think, that like we probably have never seen, and it shows in the numbers. Luca outlined some data there. The top, some of the top folks on Instagram, some of the top bands in the world when it comes to streaming numbers come from Korea, and so I think it shows there.
Well, you know, there are few who understand training as much as our next guest, well, one of our next guests, NBA athlete. This guy also knows crypto. We've had a lot of conversations, and so I'm really excited and impressed on bringing Tristan and Herman Narula on to talk about what they're doing with basketball.fan. So why don't we get to our next guest?
Wow, way to front run my intro, Sam. I was going to say,
I was
from my
excited, that's all I'm
hometown of
saying.
Brampton, Ontario, Tristan Thompson and Somnia founder Herman Narula joins us now. Welcome to the show, guys.
Thanks for having us.
Great to be here.
Awesome. Now, Tristan, the last time we talked, we were talking about Tracy AI. Now we're talking about a collaboration with Somnia that's really focused on the fan experience. Set the stage for us here. I mean, what are some of the challenges that you've experienced when interacting with your fans? And what's some of the feedback you've received from your fans?
Yeah, no, I think, first of all, thanks for having us on. I mean, we're not doing the Zoom no more, so we're in person.
Here we are in person.
Exactly. B-Town is in here, you know, we're in Korea. But no, for us, for me as an athlete, what I always experience is that, you know, we always preach and talk about how the fans are what makes the sport, right? They're our most important people. We always do that, but we never really put our money where our mouth is, or even just elevate them to a place where their voice actually matters. And I think for us, when me and Herman, when we were sitting down and talking, we just connected on that. And we're like, let's elevate our fans and actually show them how much they actually do mean to the sport and like what their potential truly is.
Look, I think this is about more than just gambling, more than just making predictions. This is about information finance. And I think the promise that, you know, groups of fans and groups of people who are passionate about any topic can accumulate information more efficiently, you know, than markets can. And I think Tristan as a founder as well is pretty unique. You know, here we have someone who's not just a world-class athlete, but actually, in my experience, you know, a world-class founder as well. He's training in the morning, he's in meetings in the evening. It's become one of our largest seed rounds that we've done as a venture builder. And look, bringing together Somnia with, you know, 1 million transactions a second and hopefully enough information on chain, maybe we start to see some like real disruptions in the way players are valued, you know, and maybe even in the way that, you know, sports conducts business.
I mean, Tristan, I can't imagine you don't bring the same discipline to your game as you do to this. We've had a lot of conversations. You are in it. You are trying to like push your brand, but also your understanding and knowledge. Herman, you're no slouch. Like we've had you speaking on stages with us for years. You know fandom. You know digital virtual communities better than most. So, yeah, tell us about how this really came together.
Sure. I mean, I'll maybe give my bit and you jump in. But look, I met Tristan, and I think like a lot of people. You know, I met him for my podcast, Herman's podcast, and I kind of underestimated him hugely. You know, a lot of the talent that we speak to who've become famous in one field often don't necessarily present as having the narratives, the articulation, the communication power to build out a business that genuinely startles us after having thought about this problem for a long time. And Tristan just crushed me. He floored me, right? Like in my pre-meetings, in my discussions on the podcast, I was like, here's a person who doesn't just understand the problem domain really well, but can actually help us understand as people who aren't in the sport, you know, how we can apply what we have to transforming it. And so I had to invest. I had to do it. You know, I think I called up my founders that day, my co-founders from the podcast. I was like, we're giving this guy money. And they were like, who are we giving money to? Why? What's happening? And so, you know, it took us a while to, you know, to get the whole thing sorted. But now we're, you know, well underway.
Yeah, but I think for us, I think we almost want to challenge the system, right? I think that's why me and Herman, like, we mesh so well, is just because, especially in my world, we're always taught, like, this is how it is, right? This is like, fans are right here, prediction markets right here, gambling's right here. And like, it's almost like we want to challenge that to see, like, are you really as good as you say you are? And is this actually the best solution, right? And for us, we came together and we're like, especially on the Amplify side, right? Like, if we're able to take all this information, and what I like to say is this, social media-wise is so powerful, those communities. And I'll give you an example. I know owners in the NBA that literally go on social media and they have fired head coaches just because they've been killed about the hire they've made. So if you can go to the community for negative and make a change to your franchise, imagine if the community is able to give you positive and great information. I'm really telling you the valuable player, the true valuable player, not just these analytic statistician guys that are just placed in here, whether it's a favor from mom and pop or just a nepotism thing, right? We're like, who actually really knows the sport and actually can help the sport grow?
Completely, and I'd say like it's the thing that won me over wasn't just the vision for what we can do for the NBA, but the idea that there is talent out there in the world, whether that's in Nigeria, Ghana, Indonesia, anywhere. And I think you were saying there's like 6 scouts per team or something to cover the entire world. And so my thought is like, well, hey, if we make it into a game, if we make the discovery of talent into something that can accumulate value, maybe we can open up a whole bunch of people to career opportunities that wouldn't otherwise have existed. And look, I think InfoFi is the next meta. There's a lot of talk of like NFTs, AI, etc. But InfoFi is maybe the most pure example of what crypto can do to make markets more efficient. And I suspect, it's where we're backing with Somnia. I think it's going to be the next big thing.
Talk us through how it works for a fan out there who's going to use the platform. Like, what does that experience look like?
Well, the experience is pretty simple. I mean, just imagine basically using the blockchain for just fantasy and prediction market, right? Everyone knows about Polymarket. Listen, Polymarket is basically more credible than CNN and Fox and all those
not
other.
CoinDesk.
Not CoinDesk. No, come on, now, not CoinDesk, not CoinDesk. But so you're looking at these two areas, and especially from the sports and the gambling side, right? Like, FanDuel and DraftKings, yes, guess what? They're doing great things. But I challenge them. Like, are they really the best source of outcome? Or really, like, we want to be disruptors in this space. And I think that's how you kind of make a change. Like, no different than, like, Uber when it came with the taxis. Like, you got to almost go left field and have this kind of crazy idea. And people might think you're, like, he's excuse my French, S-H-I-T crazy. But, like, he might be onto something, right?
Look, like completely. And look, we're already trading shitcoins. Why not trade tokens that represent players?
Yeah.
Why not trade things that really matter, right? And maybe that'll allow some of the drama, both on and off the pitch, to kind of come into into this experience. I think the other key thing for us is low fees. Like, I think you've been really big on this. It's like making this fair, making this accessible, making this somewhere where an edge actually means something. And I'm really excited about what this can be.
And have the fans really determine the value of the player. And not just the LeBron James and the Giannis.
But everybody else.
Right? Everyone knows. It's like the role players, right? Like, for instance, I'm thinking in my head, like, a guy like Marcus Smart that was with the Celtics, right? He was not Jason Tatum or Jaylen Brown, but he was just as important to the Celtics in terms of a championship run that they had, right? So, like, let the fans really ignite that and put a value behind that and tokenize it where it shows how important he is to the actual team, but in a way where we can use gaming and fantasy.
No, completely. And then the players who are first, the fans who come in earliest, they're going to have the biggest opportunity to win on this. I think there's a huge vision for the company to reward early adopters, and not in an exploitative way, but really to make them co-creators and builders. So yes, it's one of the most exciting projects we're building on Somnia.
I want to ask you, Top Shot really kicked off a lot of this, right? 2020, big Top Shot moment. Now we saw what happened with football.fun. I want to just understand why sports and crypto go so hand in hand. I think everyone, to your point, Tristan, it's like people want to know the bit players because they think in fantasy that's the one that's going to make them win. So what is it about the information of, like, I just want to do my homework, get inside, which is not that different than meme coins. Like, if I can figure this out, I can actually benefit. What is it also about sports that makes it so exciting?
Yeah, I mean, listen, when I got into the space and when I went to Token last year, you start to realize how much people in Web3 and crypto love sports. Like, they're really sports fanatics. And to be honest, they love basketball. And, like, everyone I run into, like, the 2016, like, I never realized how much people are into sports and, like, crypto. And it's, like, literally, whether it's 2K, Madden,
huge.
It's so much. Everyone uses the cliche, like, rappers want to be athletes want to be rappers. No, it's almost like crypto guys want to get on the court and play one-on-one versus their players and, like, literally go hoop. Like, you see Thread Guy and these guys, like, hooping and talking about who's the best guy in Web3 and basketball, right? And so it's, like, it makes sense. And, like, we've been getting a lot of good.
Completely. And also, like, regulatory and legal changes have heavily assisted this, right? I think we're in a very unusual situation in the United States now where, everything was either securities law or gambling. Now there's this, like, gray area, which is, in a sense, regulated and in a sense unregulated. And, with tax changes that have happened and the approach to gambling being almost seen as, like, a commodity market interaction, I think it's led to a flood of people being excited. And look, the other element to this is people like being right. People like winning. Crypto people like winning more than almost anybody else likes winning. And to have an opportunity to take something you're passionate about to win and to even catch the attention of players, and Tristan won't be the only one, I think, engaging with this with some of your plans. I think it's going to be very exciting.
Herman, you brought up regulation right there. I'm just curious, like, how closely you're watching regulation in the States.
Oh, incredibly closely.
Yeah, and, people are waiting for the CFTC to make some recommendations on prediction markets like Polymarket. How closely are you watching, and how adaptable are you?
Incredibly closely, right? And look, one of the things we believe in is that a lot of crypto has lost its decentralization. I think when you think about things like stablecoins, which have been a big aspect of growth, they're actually very centralized, and it's very easy for whether it's Tether or USDC to actually ban accounts and prevent you from using your money. And a lot of that centralization has become a way of appealing to regulators, right? And to sort of go, look, it's not that scary, it's kind of different. But a lot of the power of crypto is decentralization and co-ownership. So one of the things we're doing is why we built a really powerful blockchain was so that we could put more information on chain and make things more decentralized. So our hope is that if we can maintain credible decentralization, then no matter the regulatory climate, we're going to create an environment that is pretty appealing to folks and to allow them to build and compose businesses.
Final question, Tristan. In the locker room, how many guys are asking you what the price of Bitcoin is going to be at the end of the year?
Listen, I'm telling you, ever since I've gotten this space, and listen, my teammates will see me on Aerodrome yielding. They're like, yo, what are you doing? I'm like, I'm yielding, guys. All right, let me lock in. But really, my teammates have started noticing this. They ask questions now, and guys are like, do I get more XRP? Do I buy more ETH? So literally, guys are texting me, and then in the group chat saying yo, it's pumping. What should I do? I'm like, hold it, long term, guys. Think long. The same way you bet on yourself to get to the NBA, you got to bet on these coins and bet on the space. Bet on what the future of digital finance is. Bet on that's what's going to be our kids. That's the form of it. They're not going to be walking into these banks and these institutions. They're going to be literally having their wallets and being on a computer and literally managing their finance like this.
Everyone's going to trade. I mean, it's turning into almost like a national sport, I think, in a weird way. Yeah.
Tristan, what Sam, I think, was getting at is when they ask you what the price of Bitcoin is going to be, do you tell them a price?
All right, Arthur Hayes told us 250,000 by the end of the year. Higher
Agree
or lower?
or disagree?
I'm going to say, look, listen, Arthur Hayes is an OG, so he's a very aggressive, and he's going to give it to you hard. But, for me, I'm going to say a 150.
That's what you said.
I'm going to say 150.
All right.
I don't know.
That's what, I'd rather set the bar low and overachieve. They're like, damn, Tristan, man.
I don't know.
I heard it here first.
All right, that was NBA champion Tristan Thompson, who thinks Bitcoin could get to 150 by the end of the year. That's not bad. And Somnia founder Herman Narula. We are going to take a quick break. When we come back, we have a special surprise, so stick around.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters.
Everyone, we're at Korea Blockchain Week. Yesterday, we had Gary the Shiba Inu join us to wrap up the show, and today we have a humanoid robot. Joining us is Leonard Dorluchter, co-founder of Peak, to talk to us about this humanoid robot. And what is this robot's name?
Jeremy.
Jeremy.
Yeah.
Does he know
Why
his
Jeremy?
name?
So there's an economist called Jeremy Rifkin, and he's been very influential in terms of the work we're doing overall. And so, yeah, we thought about naming this humanoid Jeremy, and yeah, it's initial protagonist of the machine economy.
Okay, well, talk to me a little bit about the protagonist of the machine economy. What does Jeremy get up to? I think he was just waving to one of the cameras here.
Yeah, so it's one of the first humanoids that comes on chain. And what it means coming on chain is that humanoids are in the process of really becoming a big part of our society and becoming a big part of our workforce. And when they run on Web 2, they cannot really become economic agents that interact with their environment because they're enclosed systems. Once they come on Web 3, they can start offering goods and services to anyone. They can start consuming goods and services from different energy sources, connectivity sources, and so on. So they're really being connected to this vast economic system. And yeah, this is what it means for Jeremy to come on chain.
So tell me, I mean, I saw Jeremy walking around earlier. He was dancing, he was waving, he was interacting with people. What does Jeremy do?
So Jeremy, what Jeremy does is, initially, it really gets its identity on chain. It's able to send and receive payments. It's able to do other people's...
I don't know if Jeremy likes that.
Yeah, exactly.
I think that's a way.
Yeah, so whenever he does something for someone else, he can get tipped for that, right? So like it's
cool.
Showing here how a humanoid can provide a service and is getting paid for that. And that, of course, in a playful environment here in the conference.
Okay, so I want to talk about how we might interact with humanoids like Jeremy in the future. And when Jeremy gets tipped for something, what happens to that tip? How does he use that currency?
Yeah, that's a great question. So, I mean, as humanoids move more and more towards autonomy, they will become really economic agents that earn money but also spend money, right? Like humanoids need energy, for example. They need connectivity, data, servicing. So really thinking of it as an own economic agent which is making money and spending money in order to be sustainable. But then furthermore, and that's something we actually announced yesterday, is that machine tokenization is coming. So that all of us will be able to own a share in robots like Jeremy. And whenever Jeremy makes profit, that profit is being split between everyone who owns a share in it. And we think this is super important because we need to make sure that anyone can own a share in revenue-generating robots and not just a few big companies.
You mentioned that Jeremy can also spend money. So what would Jeremy spend money on?
So right now, of course, we're in the early stages of robotics, right? It's just emerging right now. But one very direct, simple use case is going to be energy, right? Like, of course, we don't have humanoids running around our cities yet. They are not that autonomous, but it will take probably only 2 or 3 years. And then they will be able to spend money on energy as well, right? What we've done so far is really preparing humanoids to come on chain, providing them the core functionalities. And once their autonomous navigation and so on allows, they're ready to become full-blown economic agents.
Leonard, there are some people, I'm going to ask for them, I'm going to address the elephant in the room, that are freaked out by this. What would you tell them?
Yeah, it is. I mean, we've just entered the most disruptive time humanity has ever seen, right? AI and robotics advancing so quickly. In the next 10 years, probably most of the jobs that we know today will be automated by robots and AI. But if we manage to build a system where anyone can participate in that value creation, meaning, for example, through tokenized robots, and anyone can participate in that machine economy, as we call it, offer goods and services also through smaller hardware devices, energy assets, and so on, we can create a much better future. And we can create income streams as individuals based on the machine economy. We just need to make sure that it's open, accessible, and democratized. And as I said earlier, not just a few big companies owning the whole thing and everyone else being dependent on the government for some basic income.
What chain does Jeremy run on?
What chain?
Yeah.
Peak itself.
So Peak is the chain itself.
Peak
is that a
the chain
robotics
itself.
chain? Is that the idea?
It's a chain for the machine economy. So we've always thought about that machine economy from the ground up. And big part of the machine economy is DePIN, for example, decentralized physical infrastructure networks. Those networks create a lot of the infrastructure that the machine economy needs. And of course, robots like Jeremy or autonomous vehicles like robotaxis are some of the more sophisticated machines that are now coming on chain more and more and can be co-owned. And yeah, Peak is designed from the ground up to power the machine economy.
Leonard, Jeremy, thanks so much for joining us and closing the show out. It was a pleasure having you on.
Thanks for having us.
Thank you, Jeremy.
Thank you, Jeremy. All right. There we go. Jeremy is saying bye-bye to everyone. Say bye, Jeremy.
Bye. Bye.
All right. That was Leonard Durluchter, co-founder of Peak, and Jeremy, the humanoid robot. We have had such a pleasure bringing you this live program from Korea Blockchain Week. If you missed any of today's programming, you can go back on CoinDesk social media. You can watch the entire program from start to finish. You can also watch yesterday's episode. We had so many great guests, Sam. We had Arthur
Jeremy
Hayes.
was the top guest
We had Charles Hoskinson. We had Jeremy, who's just so excited to say bye to everyone. We had Kristen Thompson. I think what this shows us is that there are so many incredible people thinking about how to advance the space forward. They're thinking about big problems that affect us all. So, like I said, it was a pleasure bringing this programming to you. For Sam Ewan, I'm Jen Sanasi. Thanks so much for watching. We'll see you next time.